All right, what's up for everyone watching this on the YouTube replay? In 15 minutes, the market opens and we're going to see how tech stocks are doing. Because if we look at what happened on Friday, it was pretty rough. A lot of our favorite names, Powell Industries, Amphenol, CEG, FIX, they were down massive, like 7% each. And not just them, a lot of tech names like Broadcom. I know Oracle has been in some heat, but yeah, let me give you a quick portfolio update now. I will show you some stocks that I think are interesting, and then we'll look at what happens when the market opens in 15 minutes. So yeah, here's our Robinhood portfolio. This is known as our dividend-only account, where every stock in here pays a dividend. Year to date, we're actually up 15%, not too shabby, especially from this April dip of 13%. The year is almost over, and that compares from January 1st. So yeah, we're up 15%. And if we compare that to the S&P 500, the SPY, they're also up 15.6%. So we've pretty much done exactly like the S&P 500. I try to keep it boring and simple, but that's really what creates results. Just keep it boring and simple. Just buy and hold a group of great quality names you can trust for the long run. And these are all dividend pairs, and these are all the names that I've chosen. A lot of these names are also in the S&P 500. Actually, all these are. We also have a Roth IRA. This is a tax-free retirement account. We haven't done too good year to date. We started it almost exactly a year ago, and we really put most of our money in the past couple months here. But yeah, these are all the stocks that we own in here. And I am curious to see how Webull does. Let me actually check out Bitcoin. Is Bitcoin doing good right now? Uh-oh. Well, actually, see, I hate how it doesn't show Bitcoin first. How do I just find Bitcoin? They should just show that by default. So this isn't good, If Bitcoin's not doing well, that means the futures might not be doing well either. So we'll check that out soon. Yeah, we have our Webull portfolio as well, which is kind of like our risk on account. We're up 19.5% all time in here. Why did Broadcom dip? Yo, what up, Call of Duty? We'll check out all these stocks. Yeah, if you got any stocks you guys want me to look at, let me know here until the market opens. Yeah, here's our Webull portfolio. We're up 19.5% all time in here. We got some winners and some losers. Like Rob, we have a lot of fintech names. And just a lot of popular names like AMD, Robinhood, SoFi, Reddit. Disney's been actually pretty decent. Disney took $1 billion stake into OpenAI, and OpenAI is paying Disney some licensing/royalties too, which is kind of cool. Great move by Disney. I mean, absolutely genius. It's actually 0.5% of their market cap now. So that's actually pretty crazy. 0.5% of Disney's market cap is OpenAI. So you get exposure to OpenAI via Disney. So for every $100 you put into Disney, 50 cents of it goes into OpenAI, I guess. But yeah, and then we got some losers in here as well, like Sprouts Farmers Market. Still one I'm so bullish on. I'm actually been buying a little bit more of them at $83, and it's 79. Yeah, there's our little buy orders there. So yeah, that one's been struggling. UiPath has actually been doing pretty decent the past couple of weeks here, which is good news. And Progressive, they announced a $13 special dividend. They also had a nice little gap up there on Friday, which was great. They really showed their resilience there on Friday. I'm glad I own them. Southern Company, this is our newest stock in here, by the way. They actually, if you're looking for a bit of a higher yielder, you get a 3.5% dividend, trading at 19 times PE. This is a regulated utility that literally should just give you around 7% of your money back every year. They own, they're the third largest utility in the world. They own, Georgia Power and Light, Alabama Power and Light, and gas, and 30 other subsidiaries. Local monopoly, of course. But yeah, let's go look at some of these stocks here before the market opens in 10 minutes. One of the stocks that we're going to watch in particular is Broadcom. Check out what happened to them on Friday. And if Broadcom's not doing well, then most likely a lot of other semiconductor names aren't going to do well. So why did Broadcom, someone asked, drop 11% on Friday? It was actually because of their earnings report. They reported earnings. We can actually see Broadcom reports record revenue in AI growth amid mixed investor reaction. Let's actually see what the AI-centric revenue grew 74%. You know what? Let's go look at their actual numbers and what they reported. So yeah, they're a big semiconductor play. That's 60% of the revenue. Then they have the VMware software, which is huge. That's literally, this was a massive bump up in 2024. The sales went from 7.6 billion annually to 21 billion. I can't stress how big of an increase that is just year over year. In the most recent quarter, it's 6.7 billion, 6.7 billion, up 17% year over year. Not too shabby. So the orange line is what the analysts expected. They actually beat on revenue, beat on EPS, and they beat on EBITDA. Yeah, record Q4 margin. It looks like they had a little one-time adjustment to their EPS. They didn't actually make 8.5 billion, but they actually made around 7.5 billion, which was a record. Sales are up 28, net income's up 50, so that means they're expanding net margins. I mean, what about the free cash flow? Look at this. This is the free cash flow of the company. They have 7.5 billion of free cash flow this quarter. And what up, Looney, Plasma? Good to see y'all. And yo, Mo, I'm doing great, man. Happy Sunday. Predictions for 2026. I think the market's just going to continue to keep on hitting new all-time highs. But I could definitely be wrong here, though. I have one I'll tell you about once overnight market opens because I need my order to place before you. Okay, yeah. Hey, Judes, if I say this, the ticker symbol, it'll go up before you have the chance. Your order won't fill. So Dell next week post earnings. You know what? Let's actually check the earnings hub very quickly. Yeah, the market opens in 10 minutes. We'll see how the stock market does. So let me just search by my watch list. So next week, Micron is big. At Contenture, Nike, Heiko, Darden. Darden Restaurants is an interesting one. They own Olive Garden and Longhorn Steakhouse. That's most of their revenue. They've done surprisingly well, for a restaurant in this environment. And they have a nice yield too, a 3% dividend yield. Nice little restaurant company there. I think it's a way better investment than the Cheesecake Factory. I know a lot of people are pumping the Cheesecake Factory. I don't love that one, sadly. I don't love that one. So, all right, thanks for being here. Hey, thanks for being here, AJ. I do appreciate you. So Evan said Oracle, and then Chewy. I haven't heard of Chewy in a while. Maybe we'll check them out. Oracle's another one of the AI names that tanked. They said they're delaying new data center build-outs. Oh yeah, it's kind of see that's the top article here. Oracle pushes back on OpenAI data center delay claims. Oh, this is their counter reaction actually. This article title. Or see what I was just saying is what they're getting accused of, and this is they react back. Oracle pushes back on the OpenAI data center claims. So I am curious to see how this one will open up in the overnight market, which opens in 8 minutes. Oracle delays OpenAI Stargate data centers due to labor and material shortage. This was it kind of sent the whole AI ecosystem down with it. Oracle is they trade at 35 times net income. They have a lot of debt right now. And sadly, they're a pure cloud play, but I love my cloud exposure via AWS, Google Cloud, and even Microsoft Azure Cloud. They have the lowest market share out of all. They have like a 6% market share. AWS is like 23. Then it's Azure Cloud, then Google Cloud, then it's Oracle. This one's like a pure cloud play, and they have so much like backlog and demand. And same with AWS and same with I love all the cloud businesses. Oracle is a little more expensive, and they have a high dividend payout ratio, and they now have like 115 billion in total debt. Or let me actually show you this right here. They're issuing a lot of debt. So if you look at this is the nasty stuff. Their total long-term debt in the top right. It's 99.98 billion of long-term debt plus another 15 billion of capital lease obligations. Plus, where's their current debt? Yeah, 8 billion of current debt as well. So they have a lot of debt, but this is the thing. They're making great net income. Actually, this was a one-time adjustment, but they're making around 4 billion of after tax. Well, actually, before that, it's around like 3. Well, let's just be generous. Let's say they make 4 billion in net income a quarter. Well, they don't actually make 4 billion of net income a quarter because they pay a dividend, and the dividend cost 1.44 billion. So Oracle's interesting. They have a high yield. I don't like that. But I want to see them do good. I know the TikTok servers are now on Oracle. The TikTok data is stored on Oracle servers, which is interesting. Yeah, hey, try not to spam there. We'll try and get to all these stocks here. Wait for my phone. Yeah, hey, my phone's good on battery tonight, which is good. Well, check out Arista Networks. Is there a screen that lets you see the PE of all the Mag 7 at once? Well, you can make that yourself, or you can compare it. Market opens. Yeah, hey, that's the overnight market opens. And we can basically see how every stock moves that has you could if I wanted to, and I'll show you in 8 minutes. I could buy or I could sell all my Google, or I could buy a bunch of Google if I wanted to. So we'll look at Elf Beauty, then we'll get to Rocket Lab and some of these other names here. Like Arista Networks. Yeah, Micron, can't wait for them too. So Elf Beauty, this one's expensive, which is unfortunate. If you look at the current or the forward PE, basically next year's net income, they're trading at 50 times next year's net income, which is expensive. And it's a high PE company. They traded a high valuation, and they missed on their expectations this quarter. So that kind of explains why they had such a massive gap down this quarter. They gapped down on the exact day that they reported earnings, and they missed pretty big. The analysts expected 365. They did 343. So they missed on their revenue. They missed on their EPS, and they missed on their EBITDA. So it was a triple miss quarter. And here's the weird part. They missed on revenue of the 365 million revenue, and they acquired a company for $600 million this quarter. If you go to the cash from investing activities, they spent $600 million acquiring this small beauty company. That's why their balance sheet just changed so dramatically quarter over quarter because of that acquisition, and they still missed on revenue expectations. Sadly, very sadly, this one still might be a little pricey, even after the little gap down there. But I remember this company for its massive growth. If we look at their, just go to total revenue right here on an annual basis, look at this since 2021. It was 300 mil in it. That was 300 mil for that year, then 400 mil, 570, 1 billion, 1.3 billion. They've had massive growth, but it looks like that might be slowing, and their margins are being compressed. So anyway, Elf Beauty is interesting. We want to see their net income go back. What happens is, hey, if this is a brokerage right here where you buy stocks on, if you want to get it, it's in the link tree in my bio, the very first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get a free stock. But yeah, my favorite brokerage. And it has the best analysis tools. So anyway, Rocket Lab right here. This is a $32 billion company. This is a space company. This is my favorite space stock, but they're so overvalued, ridiculously overvalued. But, this is the number one space momentum play. But and the thing is, they're probably going to continue to keep on going higher. I wouldn't trust a lot of money in this one. I wouldn't trust any of my money, but I would keep, especially at this risk to reward after how much it's gone up. But they have a lot of new contracts that are happening. Check this out right here. Rocket Lab to launch Earth observation satellite ahead of their Japanese basically JAXA mission. Rocket Lab reports 48% revenue growth. Rocket Lab completes qualification testing for neutron reusable. Rocket Lab secures Canadian Space Agency grant. So they're getting a lot of deals. If we go to their space systems revenue right here, it's phenomenal growth. It's up 36% year over year. After grew 81, after grew 15. So the growth rate is very nice. It was over 100 million for the first time ever. They also have their launch services business, which is also at a record up 95%. But the net income is a bit bad. They're losing 60, 50 mil a quarter. But here's the thing, as long as they keep up this top line growth, 47% revenue growth, part of that was from their acquisition of Geost. But as long as they keep up this growth, they'll probably continue to do good. But it's so 33 billion market cap is pretty ridiculous. It's pretty high. Hey, let's see here. What up, Zero? Let's do Arista Networks real quick. Robinhood. Hey, do you mean Robinhood stock? Yo, I also have Robinhood right here. Yeah, the overnight market opens in 2 minutes. We'll see how the market opens in 2 minutes. Judging by how Bitcoin's doing, I don't know how it'll do. But here's Arista Networks. This is a stock I love. They're a little expensive, a 42 forward PE, but they did this. A company with this sort of financials deserves a high multiple. Check this out down here. If we go to the revenue grew 27% year over year, after grew 19, after grew 28. But look at the net income they're making every quarter. They're easily making, and this is after tax. They made 850 mil of net income, after tax net income, after they paid 160 mil of taxes. That's insane. They're really netting 900 mil of net income a quarter, plus a really good balance sheet. They acquiring businesses. Yeah, they're spending a lot of money. That's great news. So, and they're beating on expectations. So let's see if AI has anything to say about Arista Networks. Product revenue grew 25%. Service revenue grew 38%. So that was, anyway, Arista Networks, any news down here? Nope. Anyway, I just love their numbers. They really make a lot of net income. Where's this data coming from? Well, on this brokerage, but they get their data from S&P Global. So yeah, or if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. My favorite app to buy stocks on. 60. Hey, what up, Pierto? So 1 minute to go. Roblox stock. You know what? Roblox, that's a Kathy Wood stock. If you go to the Kathy Wood portfolio right here, actually, she's lost a lot of respect. And hey, J Rich, be in. No way I didn't even see that, dude. Thanks for for that gift. I appreciate that. So yeah, here's Kathy Wood's portfolio. One of her holdings. Whoa, Roblox isn't even in her top 10. Whoa, dude. I remember it was maybe 2 or 3 months ago. Roblox was her second or third largest holding. Now it's not even in her. Yeah, look at her, a massive underperformance on the 5-year chart on the S&P 500. Anyway, let's just pull up Roblox right here. Did they go down that much in stock price? Yeah, see, I've been expecting this. This isn't a stock I'm actually not interested in buying the dip on, sadly. But there's some really, really good news, but there's some really, really bad news too. But and it's kind of a mixed bag here. Here's the super good news. I can't believe if this is real. Look, this is their daily active users. It went from 111 million to 150 million just quarter over quarter. Literally quarter over quarter. It went from 111 million to 150. I hope that's not propped up on AI bots, but if that's true, that's ridiculous. But here's the bad news. If we go to their net income down here, GAAP net income, they lose a lot of money. like literally 200, and it's worsening. It's 35% more. So they're losing 250, sometimes more than that, of net income a quarter, and they're really leveraged. They have debt to pay, and I just don't like the position that they're in. Like they make good free cash flow, but the free cash flow doesn't include the stock-based comp. So they're losing a lot of EPS and basically net income, which is unfortunate. And they're just nowhere near profitability either. So that's what scares me about Roblox. I just don't really love companies that just lose that much amount of money, but it's so impressive to really see their active users grow like that. I wonder if this has to say anything. User and engagement surged with daily active users, an increase of 70% year over year, and hours engaged rising 91%, driven by popular games and infrastructure support. Monetization revenue showed mixed results. Bookings beat 13%. Guidance for next quarter was conservative. Interesting name there. So let's go check out the market really quickly. It opened less than 60 seconds ago, so there's not that much volume. We should really come back and get many here, but it looks like the Qs are green. No way. Qs are up by 0.12, SPY's up by 0.17, Nvidia's green. Let's go see Oracle really quickly. I'm curious. There's Bitcoin. Oracle, how are they doing? And it's only been 1 minute. Ooh, they're down 1.69%. All right. D-Wave Quantum. Yeah. Hey, what's their ticker symbol? If you have a stock, give me the ticker symbol. And actually, I know that stock and I don't like them. So sadly, I have nothing good to say. That's some quantum momentum kind of junk, in my opinion, sadly. Or from a pure financial point of view, D-Wave Quantum's not good. Would a share of Waste Management make a good Christmas present? Looking for more of a stable stock to oppose the test. Yeah, yeah. I'm sure, yeah. It won't be appreciated, but you're really doing them a favor in the long run. But that would be. So let's look at Palantir. Yeah, someone said Palantir. Who said that actually? I want to say their name here. Sun. What up, Sun? So here's Palantir. The sad part is they're super expensive. 250 forward PE. I love Palantir. They certainly deserve a high multiple, but not that high of a multiple. They half the revenue actually comes from the government. You know, the government loves them. A lot of police stations use them. ICE use them, which is why actually a lot of people don't like Palantir from an ethical point of view. The military, the Air Force use their software and their products. And check this out. The government revenue's up 55% year over year. After grew 32, after grew 12, like just this phenomenal growth. And that's not even the best part. It's actually the commercial side of the business that even has better growth. That year over year grew 73%. Just monstrous top line growth, beating on expectations every quarter. The bottom line's insane too. They're netting so much, a couple $100 million in net income a quarter, monster balance sheet with no debt whatsoever. So like absolute fortress balance sheet. They just grow their cash pile every quarter. So yeah, Palantir, I'd love to own them, but still way, way, way too expensive. Is Broadcom up overnight? Let me see that real quick. Looks like they're down 0.3% in the overnight market. Let me check Robinhood real quick again. Yeah, we're actually down 0.2. Looks like McDonald's is down 1.6. That's probably not on real volume. S&P's up 0.14. Yeah, it's only been open for 3 minutes here. Yeah, we have to. It doesn't even want to load in the new chart yet, so we'll come back to that. Oh, well. Let's see here. Dell and Oracle. Yeah, hey, let's check out Dell right here. So actually, the first two stocks we looked at on the stream are Broadcom and Oracle. So if you want to see a super in-depth analysis of Broadcom and Oracle, check out the very beginning of the stream. By the way, I'm streaming on YouTube, so you can replay it. My YouTube channel is called Nathan Robert. It's also in the link in my bio, and I'll go over them again in a little while. So here's Dell Technologies right here. They're a 13 forward PE. This is like a value stock. Actually, Dell is super interesting for two reasons. First off, they have a really nice yield, a 1.5% dividend yield. Very safe payout ratio, and I'll show you the payout ratio exactly. Yeah, actually, the growth I like is their infrastructure solutions, their server rack installations, GPU, all that installation. So that's up 25% year over year. Last quarter grew 44. Great numbers. And here's their after-tax net income. Like, they really made 1.6 billion net income after paying 300 million taxes. Like, they really make over $1 billion, well over $1 billion of net income a quarter. So what are they doing with well over $1 billion of after-tax net income a quarter? Well, they pay a dividend, and the dividend only only cost $350 million. So what are they doing with their leftover cash? Insane share buybacks. At the top here, they're buying back well over if you average it out, over $1 billion a quarter of their stock. So here's what that does. The net income's up 32 and the EPS is up 39. So that means they bought back over 6% of the entire company. So there's 6% less shares that exist, and you get a 1.55% dividend. They're just so shareholder friendly. And the forward PE is a 13.4. That's really interesting. This looks like Moomoo. Yeah, hey, this is Moomoo. Yeah, if you want to get this app, link here in my bio, or you can just type it into Google App Store. Broker called Moomoo. Yeah, if you want my affiliate link tree in my bio, first link there. Is Amphenol really up right now? No way, dude. This is the stock we bought. Will it show yesterday's? No, it won't. We bought this stock. This is the stock I bought, the most recent in here. We bought the dip on Amphenol on Friday. Pretty nice. Hey, Dump, what up, dude? He said ITRG. Let's do it. ITRG. So this is Integra Resources. Look at that monster rally. Is this like a silver or a gold stock? I mean, that's insane. The stock went from $1 to $4. So what's the market cap? Okay, so a very small name. Do beware. The market cap is 700 million, but the forward PE is a 7.6. So it's probably that implies to me, the forward PE ratio being a 7.6 implies to me, this is going to sound crazy, that this is the kind of stock that's probably just going to continue to climb higher. Again, it's a really small market cap. Let's see what they're doing. Wait, Florida Canyon. Wow. Analysts this quarter expected 37 million in revenue. They reported 70 million. No wonder they gapped up so much on their earnings day. And the operating profit, you ignore the net income because they have a little one-time adjustment. The core business, really, this is the before tax number, 20 mil of, we'll call it 18 mil of net income. Last quarter's 15. Like this, I'm actually going to put them on my watch list. This really is the kind of stock that is just going to go higher. Let me see what industry they're in. Other precious metals, Florida Canyon Mine, located in Nevada, even though it's called Florida Canyon. And includes the DeLamar project. What exact precious metal? Okay, just a lot of them. Hey, there's kind of like their project here. This mine must be printing them money because they made 20 mil in net income basically this quarter. Anyway, thanks for that one. It's a very small market cap. Be careful. But hey, no way. Spread the wealth is in here. Deher said IONQ. I'm a little behind here. Hey, yo, good to see y'all. AJ, Steph, Looney. Yo, if you want to hit the follow button, we actually stream every Sunday at this exact same time. So yeah, IONQ, this is a bit of a quantum name. Let's see if there's any news down here. Wow, someone rated this a $90 price target. IONQ expands in Europe with Quantum Communications Network. IONQ and InRide partner to optimize freight logistics with quantum computing. So this one actually has sales. Look at this. Analysts this quarter expected 26 million. They did 39 million. That's a great little beat there, but they are losing a lot of money. Like 100 mil, 200 mil, somewhere in that quarter. But they actually acquired a company. This is what I love. Here's what they did, which is why I like them more than like a QBTS. And I still don't love this one because it's ridiculously overvalued. Amazon sold their entire stake into the stock around up here too for a massive profit, man. Amazon made, well, compared to their market cap, it's nothing burger, but Amazon did sell their entire stake in this stock. But what they did was they diluted the shareholder by $1 billion up here, and then they just bought a great asset for $1 billion. So that's where some of that sales growth is coming. Anyway, quantum momentum stock, I would keep the allocation very low. What platform is this? Yeah, hey, Ben Stocker, if you want to get this brokerage, it's where you buy stocks on. It's in the link tree in my bio, very first link there. Affiliate link, full disclosure, so if you go and deposit $100, we'll both get like a free stock. A lot of people like to keep their idle cash in here in the middle of my screen there. Hopefully that didn't, hello? Okay, mic is still good. Thought I broke it. But anyway, let's look at some more stocks here. Okay, Bitcoin is cool, but I know very little. Oklo. Oh, RXRX, RXRX, NVIDIA owns a bit of them. Yeah, Waste Managed, pretty interesting. Can you check beta? Can you look at stocks XERS? Hey, red or green, what's up, dude? Actually, let me look at XERS, then we'll look at, remind me to get to, I'm so behind, I'm sorry, like system, remind me to get to BRZE and Beta, someone said, BETA, I keep seeing, we'll check that one out. Exeris Pharmaceuticals right here, a very small name, so do be really careful. They're worth $1.1 billion, but they have a forward PE, a 53 forward PE. The current PE is a loss, so they don't make any net income right now, but they're just now getting to positive. Net income positive. Yeah, look at that. So they used to lose 15 mil a quarter, but now they made 600K of net income this quarter, and analysts are expecting that net income, to even continue stay profitable, which is great news considering they can't really. This is a bad looking balance sheet, so it's great that they're finally net income positive. And the sales are up 37% after grew 12. So it looks like they sell these prescriptions like Recor Lev right here. Wow, that's up 108% after grew 118 after 220. It was literally 8 million of sales, and now it's 36 million. You annualize that, that's a great number there. They also have Gvoke, that's up 9%, not as growthy, but still 9% is good. And Kev, I don't know why I'm checking all these, but yeah. Oh, that one's actually down slightly a bit year over year. So anyway, that one's an interesting one. Looks like they're finally getting net income positive. I'd still be careful with that one though. Let's see here. Ooh, Circle. Hey, I do want to get to Circle. And yeah, happy holidays, Adrian. Good to see you, man. Nick, good. What's up? He said Google. Yeah, let's do Google real quickly. They're kind of seen as like AI proof right now, AI resilient. Google's coming out with these game-changing TPUs. This is literally an ETF in one pretty much. Google Gemini gains market share. Let's actually see. I think they have like 600 million daily active users. Google's Gemini chatbot increased its market share to 33%. Wow. Narrowing the gap from ChatGPT. That's a pretty cool market share. Google, DeepMind, and UK government collab. Well, let's go look at their numbers. I mean, obviously their numbers are going to be flawless. ETF in one. They literally own Android, like Google Pixel phones. Like the Google Play Store is crazy. If you go spend $100 on the Google Play Store, they keep $30 of it. They own YouTube, which is best asset. Google Cloud. Quantum chips, TPUs, Waymo. So here's their net income. Here's the bottom line. They're easily making 20 to 30 billion of after-tax net income a quarter. So what is Google doing? Well, they're spending a lot on AI right now, 27 billion, 25 billion. They can easily afford to do that. And they're also doing insane share buybacks. They've had to slow it down recently, which I do like. I'd rather them spend it on AI than buy back their own stock at all-time highs. But they've always historically bought back like 15 billion, 16 billion of their stock every quarter, and they pay a dividend. So no wonder this stock just never goes down. It's one I'm never selling, no matter what. I'm diamond handing Google. Oh, hey, we just went green in our portfolio. So yeah, we do own 19 shares of Google. The market is open right now. Let's see. What is hey, look at that. Qs are up 0.09, SPY's up. Everything's green right now. Hood's a little down, but interesting there. Let's go. Hopefully keep that up. Any good consumer stops? Maybe Nestle. Nestle's a European company. What? They're like an ADR. Is this at 4707? I don't know. Nvidia. Yeah. Hey, try not to spam there. Yeah, let's do Nvidia stock. Why not? How are they doing overnight? Nvidia is really cheap right now. You could easily justify like a $250 stock price on Nvidia. The forward multiple is a 27. I mean, that's so crazy. I mean, if we look at the EPS projections, it's just straight up. It's literally going to go from 76 cents to $1.50 like year over year. Like the EPS is just going to continue to keep up that 100% growth rate if these analysts are right. And they always slightly beat on EPS every quarter. I heard they're like, the shareholders are kind of sniffing out some weakness in like the late half of 2026, early 2027. Who knows? All we know is that, wow, the sales are going to go from 44 billion to 70 billion. Here's the thing. Here's why Nvidia deserves all the hype around them. If another company can pull this off, they deserve to be worth 4 trillion as well. Look at this. The sales are up 65 after they grew 111, after they grew 283, like just continuing that growth. And analysts are expecting it to just continue. Huge GPU market share, 24% market share. And if we go to their bottom line right here, the net income, their after-tax net income was 31 billion, after they paid 4 billion in taxes. Like that's insane what they're netting. And then they up their buyback program. They are taking stakes. They own a bunch of stakes in a bunch of different companies. Like if we head over here to the NVIDIA portfolio, they actually added some new portfolios in here. No way. Who are these people? You know what? We'll actually come back to this. I have no clue who these people are. But they felt the need to put their portfolios in there. But oh yeah, the NVIDIA portfolio. NVIDIA owns some stakes in individual companies, like a huge shareholder of CoreWeave, APLD, ARM, Nebius, and all these other names right here. Mostly because NVIDIA gives them money and takes stakes in them just for them to go buy NVIDIA chips with all the money. Because, especially CoreWeave, APLD, and Nebius, those data center companies. I think NVIDIA will keep up with the S&P 500 for sure. Waste management is really good. Yeah, should we look at waste management? Hey, Brian Paul, what up, man? I've got it in a utilities portfolio. Hey, nice. Waste management is what got to be. I have them in my safe never sell watches. I have a safe never sells. I got Microsoft, AbbVie, HCA, and I got McDonald's and waste management. I mean, talk about like AI proof stock right here that just has monster results. It just always performs well and you get a yield at the same time. Waste management's a safe one that I'd recommend to just dime in hand. And it's not like it's underperformed the S&P 500 either. Well, maybe on the past year it has. Someone said, hey, GE Veranova. Yeah, they're making like these turbines that go under data centers mandatory, because if the electricity grid goes down, data centers can't afford to stop running. So they have put in their own like turbines under the data centers to power them. And here's their power revenue right here. What's the EBITDA on this company? Hey, they had a great beat on earnings. Look at that. The top line, analysts expected 9.15. They did 9.9. Let's see, what does the AI kind of cover about the stock? Power segment increased 14%, supported by an increase in gas power equipment, which is the things under the data centers, and equipment backlog. Oh, so their backlog went from 55 to 62 gigawatts. In their electrification segment surged 35% year over year, with orders doubling organically. That's a cool part there, organically. Wind segment EBITDA losses were approximately $250 million a year, despite 9% decline in revenue. So yeah, they're in wind, I guess, too. Interesting there. They're super expensive, I will say. Yeah, 56 forward PE. Notice their current PE is 108. But the forward PE is 56. So that means they're expected to basically double their net income, and they're maybe pricing in that growth now. So it is pricey. CEG is another one I love. CEG. But yeah, GEV is cool. Ninja said AMTM. Let's check that one out. Momentum Holdings. And hey, Chris said Duolingo. Hey, Duolingo is a cool one we'll check out too. Is it a good time to invest? I think, I think it's a good time to dollar cost average. Don't spend all your money today or tomorrow. Slowly buy in, very disciplined, patient approach. And you have to have that patience and discipline, or you can't fall for the FOMO. But yeah, here's AMTM right here, $7.2 billion company, but the forward PE is a 28. That's actually a great forward PE. So yeah, they gapped up very massively on earnings. So let's go see what that earnings report was. They haven't been public for too long. Global Engineering Solutions, And they've only been public for about a year, so that's why we don't have that crazy long data here. Digital Solutions, that grew 180% year over year. That was a massive beat this quarter. Whoa, they beat by like 350 mil. They beat on revenue, missed on EPS, but was it like acquisition related? No, it wasn't. But yeah, they really made. Wow, they're actually, that's why the forward EPS, that's where you look at the forward multiple. They've had some weird one-time adjustments. Like last quarter, it says their net income was negative, but the actual business made 85 mil. So they should be making like 60 mil of net income a quarter at least. So that's where they get that forward multiple. Interesting there. They must have had good guidance. Yeah, let's do Duolingo real quick. This is a great one. Every time he makes the waste management stock gift a little more personal. Every time he throws something away, he can be happy and he can support him. That's funny. So here's Duolingo right here. They have incredible growth, but the valuation sadly might. I love Duolingo. They might still be slightly expensive even after this huge decline right here. Now, one of the reasons they have also had this kind of PE collapse is because the AI thesis hurting them. OpenAI has created a language learning app competitor. Same with Google, that's free, where basically Duolingo is an app. You go on there, you pay for their subscription to learn a new language. You learn a language on them. And there's increased competition now, but That's all like future, like that's all FUD. Because if you go to their right now revenue, here's their subscription business, which is 85% of their entire business. The growth is massive. Like there is no slowdown. The revenue's up 45%. After grew 48%. After grew 46%. After grew 56. Like it's always 50% growth rates. It just doesn't go down. There is no red numbers. Subscription revenue is growing crazy, and if you don't pay for their subscription, you see ads. Their advertising revenue's up 45% year over year. So everything there is headed in the right direction. They beat on every single metric. Oh yeah, but here's the thing. If we look at their current PE ratio, it says they're trading at a 24 PE. That's actually not true. The forward PE, so next year's net income, they're trading at 43 times next year's net income because they had a little one-time adjustment this quarter. It says they made 292 mil in net income. They didn't actually. They only made 35 mil, but this was still a record, up 160% year over year. Phenomenal quarter. Great numbers. Every financial metric is great, but the PE multiple for PE ratio might still be really expensive, sadly. Not crazy expensive. It's starting to get to the point where you like nibble. You start the super small nibble, and then once it falls another 5-10%, then is kind of when you allocate more there. Oh yeah, we wanted to get the BRZE stock. 100% growth rate maintained. My closet is full of semiconductors already. Hey, oh, we'll look at Powell too. So here's Braze. Let's see what this is. They gapped up on earnings day. So let's go see what their earnings were. So they just reported earnings. They're a customer engagement platform. They beat on revenue. They missed on their net income and slight beat on EBITDA. They don't make too much money, or in terms of, well, actually they lose money. They lose 30 mil of net income a quarter. The losses did worsen 30% year over year. The market cap is 3.7 billion. That's kind of pricey. Well, I mean, the sales are 200 mil now, are probably going to be 200 mil a quarter. It's like a software name. The software names always trade expensive. I don't like that they lose net income every quarter, but it's really not the end of the world because, analysts expect them to lose net income as long as they kind of narrow these losses faster than the analysts expect. Braze application combines messaging and audience, rewrite the rules for customer engagement. Here's kind of like their website right here. Oh, look, they got MetLife and interesting customers there. Well, they have real revenue. They are doing great. mRNA. Hey, this one I wouldn't touch this one. Sadly, I'll be super quick about this one. This was the vaccine play. They sold a bunch of vaccines back here. The stock was $400, and you can. Whenever a stock has such a massive decline like this, you can it's usually explained why just by looking at their financials very quickly. So if we go to their revenue right here, the revenue, the sales, the lifeblood of the company, check out these year-over-year comparisons. The revenue is down 45% year over year. Last quarter is down 41, down 35, down 65. Oh, that's after that fell 30 and 91 and 40 and 45. So the growth is completely gone. And not only are the sales super negative, but the net income is terrible. They're losing like sometimes $1 billion a quarter, but like they're losing a lot of net income. I just can't trust mRNA. No, nothing's really blowing me away there, sadly. So, oh yeah, what was this one? Beta? Hey, are you still here? Oh yeah, what up, Jeffrey? Let's do Beta stock. Let's see, Beta Technologies. Looks like they just IPO'd. A $6.8 billion market cap. But the free float market cap is only 750 million. So less than 10% of the total shares are available to trade. That's interesting there. So they're a service business. Again, they just IPO'd. Well, that's not good revenue. 8 million this quarter, and they're worth 6 billion. So the revenue is 8.9 million. This was probably their IPO fee of negative 430 mil, but the quarter before they lost 76, 75. Yeah, these aren't good numbers. I don't know about this. And it says their service revenue is down from the full year 2023. And sadly, there's not too much data for me to really analyze this name. Here's their website right here. Looks like some aircraft company. Yeah, the capital of electric cars is turning to electric planes. GE Aerospace and Beta Technologies partner to advanced hybrid electric flight. So are they making electric planes or something? I don't know. I'd be real careful with that one. All right. Is GOOW too risky? What is GOOW? The Roundhill Google Weekly Pay. Yeah, this looks like a covered call ETF. What's the dividend? So a 17% dividend yield on this company. Google's done so great. Let me actually pull this up right here. Let's compare this to the actual price of Google, because this is just a company, I'm guessing, that just sells calls on Google. And, that's an asset you sell calls on because you get a lot of high income. So, yeah, you buy that to maximize your income. In the long run, it shouldn't uh, outperform Google. But interesting one there. Oh, hey, Marcus, remind me to get to McDonald's. I do want to get to that one. I want to look at Powell Industries first. And actually, real quick, let me see how the market's doing. We haven't even looked at our Webull portfolio. Google just went negative. How's the SPY doing? SPY's still green, up 0.16. Whoa, NVIDIA's up 0.4. Let me go check out the Webull portfolio. This should update live as I refresh. Boom. There we go. So it looks like Disney screen, Southern Company. What's down? Dave is down. AMD's down a little. Our Robinhood's down a bit. So, nothing really crazy moves right now. All right, let's get back to the analysis here. Okay, I'm a little behind here. My apologies if I'm missing some of y'all's stocks. We're going to be live for, don't worry, well over another hour and 30 minutes looking at stocks. We stream every single day and every Sunday at this exact same time. By the way, I sell nothing. If you wanted to follow button, I sell nothing. I have no course book. I'll never follow you, DM you, nothing like that. So here's Powell Industries. This is your kind of electrical infrastructure play with their switchgear solutions. So they're a $4 billion company. The PE is a 22. The forward PE is a 22. So that's why I'm up 4x on this stock, and I wouldn't trim it because the valuation even today is fair. The whole company is worth $4 billion, trading at a 22 PE. They also have completely no debt, completely debt free. They don't owe anyone any money, and they have $475 million of cash. So over 10% of the entire market cap is just their cash on hand. Someone said, am I tripping, or isn't the market closed on Sunday? The market is closed on Sunday, but it's the overnight market that is open. It opens at 8 p.m. on every Sunday. But yeah, since they have so much cash on hand and no debt, they're earning positive interest. They made $4 million of interest on their cash this quarter. They're making that every quarter, and that literally covers the cost of the dividend. This company pays a dividend, and that dividend only costs $3 million of net income a quarter. They're making more interest on their freaking cash than the cost of the dividend. They have a 0.32% dividend yield. Technically, they also earn like 4% of their market cap in terms of just interest on their cash because they have so much cash. And they beat on expectations. They beat on revenue, EPS, and EBITDA this quarter. Was a triple B quarter. Remember, the dividend cost $3 million. They made $51 million net income, after they paid $13 million of taxes. So there's a lot of future dividend growth. They also have a backlog of $1.5 billion, a $1.5 billion backlog of orders they haven't fulfilled, which is like 20% of the market cap. Pretty cool name there. Do you think Walmart's a good stock to invest in? Walmart has done surprisingly impressive. Look at Walmart. It looks like NVIDIA stock right here. So yeah, I don't know about buying Walmart. Walmart is more expensive than NVIDIA, Amazon, Google, Microsoft. The forward PE is a 41. It makes... honestly, I'd rather buy Amazon than Walmart, because Amazon's kind of the same thing as Walmart. And the forward PE on Amazon's a 29. Wow. Amazon just expanded their same-day grocery delivery business to 2,600 cities. Let me see if I can find that. Look at this. The second news here. Amazon expands same-day grocery delivery to over 2,300 U.S. cities. And when they initially did that, Instacart fell. Amazon launches Rush pickup service for faster delivery. Amazon and Comcast launched Luna. AWS. Amazon's another ETF in one to never sell. ChatGPT can teach me Spanish. Duolingo has no future. That's certainly a risk, yeah. AutoZone, Looney. AutoZone's a cool company. So if we go into a recession, here's kind of a cool thing here. If we go into a recession, usually AutoZone responds differently, because in a recession, people usually don't. They put off buying that new car and spend money fixing up and keeping up with their old car. So the company trades at a fair valuation, a 22 forward PE. The current PE is a 24, so there's a little bit of growth expected to their net income. Auto parts store. So yeah, the growth has been a little bit slow, 2.47%, but in their net income has been negative, but they spend all of their net income. The best part about AutoZone is they spend all their net income on share buybacks. That's why this stock since 2019 has just been a monster performer. They buy back on average 5% of all the shares that exist every year. So if they spent that money on a dividend, you get a 5% dividend, but instead they spend it solely on share buybacks. And here's how that helps. The net income, as you can see, fell 6% year over year, but the net income per share only fell 4.55. They have slowed the buybacks a little bit because the net income has slowed. But Anyway, AutoZone's one on my watch list. I'd love to get them cheaper. CCJ, hey, let's do CCJ. Hey, Chemico. All right, what up, guys? What up, Blade? Igor, yeah, my bad if I'm missing some of these stocks here. Um, so, all right, Amazon's up 3% year to date. What a joke. Yeah, hey, Amazon has been flat on the year. Um, I'm a shareholder. So here's Cameco right here. This is my favorite uranium play by far. It's still really expensive. Or the forward PE is a 58. Its current PE is 104, so they're expected to nearly double their EPS, which is great news. But yeah, huge uranium play. Let's go see if there's any like earnings up here. So uranium, I love them for the uranium because it's a Canadian company because the U.S. is no longer getting our uranium from Russia and China like we used to. We're now trying to source it all from the U.S. and Canada. So the uranium segment generated $520 million, accounting for 85% of total revenue. So that is basically a pure uranium play. Let's see. Let's go look at their numbers down here. So yeah, the net income was probably it's a little choppy and cyclical. But anyway, this is your most quality uranium play out there if I had to pick one. Plus, they pay a dividend. You go to the ticker symbol URA, which is the global uranium ETF. The largest holding in that ETF is actually just Cameco, 22% of the whole ETF. So that's my favorite uranium play. Then I love LEU as well. So, oh yeah, let's do McDonald's really quickly. I am super bullish on McDonald's. Y'all aren't going to believe how well, this is like one of the most boring blue chip stocks ever, but it's boring that does great in the long run. I mean, look at it, like McDonald's just doesn't go down. Here's what I've been saying. McDonald's will give you around 7% of your money every single year, 3% in dividends, 3% stock price appreciation, and then 2% same store sales growth. Actually, I should lower the dividends and buybacks because they have been slowing the buybacks, but yeah, McDonald's is a great never sell company. I am a shareholder of them, so full disclosure. And they're known as literally almost recession proof. So, oh yeah, we have a little dividend coming in from McDonald's, but yeah, we're up 12% on them. McDonald's is actually a real estate royalty company. So if you go spend $100 at any McDonald's, $4 of it goes back to the parent company as a royalty. And they also own the land, the real estate under 80% of all the stores. So they also collect rent from every tenant and royalties. So they have a huge real estate portfolio. That's why you really don't look at their net income because it doesn't add back the depreciation and the amortization of their real estate portfolio. But you still do. Let's even look at the net income on a dividend payout ratio. So they're easily making, if we average it out here, $2 billion of net income. It's going to be more than that, but they're making $2 billion of net income a quarter. They pay a dividend. The dividend only cost $1.26 billion of net income a quarter. And yeah, above that, they're doing $500 million of buybacks a quarter. So McDonald's is one of the safest names out there. In a recession, literally, they acquire a bunch of cheap land. So here's McDonald's. As we can see, McDonald's pretty much all-time high. Let's check out one of their competitors, Wendy's, which, again, doesn't have the same franchise model, doesn't have the real estate and royalty model. Wendy's all-time low on this guy. Poor Wendy's are pretty much all-time lows, lower than they were in 1997. That's unfortunate. So I am totally biased on them, but hey, Steven, ONDS, let's check it out. Hey, AJ, we'll get to EVEX after this. So sorry. What up, Swervy says SCHG. We'll check out all these. So here's Ondas Holdings. I think this is some autonomous LiDAR or autonomous systems business. Well, the reason the stock has done so great in stock price and has had all this momentum, stock literally went from 76 cents to $8, is because of the future growth expectations here. And if they can pull it off, which they definitely did this quarter, this is the kind of stock that will probably just continue to go higher. Now, that being said, it's almost certainly overvalued at this price, but it's such a small market. Like, it'll probably continue to do good, but I'd keep the allocation super low. But check this out. This quarter, they expected $7 million of revenue. They did $10 million. Like, look at these year-over-year comps. The revenue is literally going to go from $4 million to $17 million. You annualize that. That's like basically $80 million of revenue. Add a little bit more growth on that. So you're really going to, if you're a shareholder of this one, you want to hold it for really the next year to 2 years to really see and watch how they beat on these expectations to see if they can continue sending the stock higher. They also just fortify their balance sheet via diluting the crap out of you. But if we go to their cash on hand now, they have $450 million of cash. Look at how their cash went from $67 million to $450 million quarter over quarter. How'd they do that without issuing any debt? Well, at the sacrifice of the shareholder. You own like 20. Well, let's actually see. Well, yeah, you actually own like 15% less of the company than you did a year ago, but it forever fortified their balance sheet, and it's actually smart of them to for almost like to raise that cash. Anyway, Honest is interesting as a small name. What app is this? Yeah, hey, by the way, this is a brokerage where you buy stocks on. If you're interested, if you want to get this app, it's in the link tree in my bio, very first link there. And full disclosure, it is an affiliate link, so if you go and like deposit $100, we'll both get like some free stocks. But yeah, my favorite brokerage, lowest fee, cost nothing. A lot of people like to put their idle cash in here too, because you get the 3.35% kind of APY there. So let's see. Ooh, I'm so behind here. EVEX here. EVEX. So Eve Holdings. I actually haven't heard of this company before. They have not done too well, sadly. But what's the market cap? A $1.6 billion company. So they're a revenue-less startup kind of. So if you go to the revenue and the expectations, says no data here because they've never sold anything. They've never sold a product or a service before. And they're losing, yikes. So they're losing 50 mil in net income a quarter. That's not great. Looks like they just had to issue, yeah, dang, 230 mil of shares. Hey, try not to, oh, that's not cool, man. Hold on here. But yeah, that's unfortunate that they just don't have any revenue right now. The revenue's zero. Maybe whenever, I don't know if they're like a biotech, no, an aerospace and defense company, or a drone concept. I'd be careful just because they have no revenue and they lose a lot of net income. That's the only part that scares me a little bit. Let me go over Circle real quickly. Are you planning on buying the Medline IPO? No, I don't really buy IPOs, but what's their ticker symbol? We'll actually check them out. I haven't looked at them, to be honest with you. So here's Circle right here. It's actually a really great company in my opinion. I'd put them on the watch list if you like crypto kind of companies. They're actually one of the stablecoin companies. They literally have a 29% market share for stablecoins. If you've heard of USDC before, they're in like the top 10, I think, market caps of all the cryptos that exist. They have this stablecoin, and they've been partnering. Yeah, 29 financial institutions are now creating like these stablecoin cards. Like it's got interest from Walmart because like if you have a Visa card, you go spend $100 at Walmart, you pay 1.5% to Visa, and the store pays another 1.5% to Visa. And they're trying to completely negate that. And they had great earnings this quarter, 699 mil of revenue. Expected they did 740, and they're printing. They make great net income. I mean, they're going to be making around 200 million in net income a year market cap. So they are expensive at a 19 bill market cap, but it's a nice company. And there's no really other publicly traded like stablecoin name. SCHG, let's check this one out. Hey, yeah, we'll try and get to C too. Hey, I'm sorry, guys. I'm so behind on the stocks that we'll be live for well over another hour. But yeah, all right. So here is SCHG, 52 billion of assets under management. This looks like it's outperformed the S&P. So this is an ETF right here. An ETF is just a basket of stocks. And his largest holding is NVIDIA, then Apple, Microsoft, then Broadcom, then Amazon, Tesla, Google, Meta. So it looks like a slight bit different from the S&P 500, but it's done just as well. Large cap ETF there. Interesting. Bro, when will Bitcoin recover? I hope so. Bitcoin, are they at 88K? Or actually, let me check on the Qs real quick. Our portfolio, we're up 0.04, so we're flat. Oh, look at the Qs. The Qs just went up a bit. No way, it's up 0.18%. NVIDIA's up 0.8. Robinhood just went green. No way. So that may be good for crypto. Who knows there? All right. The only crypto I've got is ADA. Is that Cardano? You can like stake that one. Do you like Coca-Cola? Hey, which Coca-Cola? I actually own the bottling company. This is Coke Consolidated. One of the best performance stocks like ever, but it's not the same normal Coca-Cola company that has a high yield. Trade Desk, yeah, sadly, Trade Desk looks pretty overvalued here, sadly, even after the dip. Hey, not for you. You're doing awesome, moving this faster. Hey, I appreciate that. Yeah, I'm trying to go quick. I only try and spend like a minute on everyone's stock because I know a lot of people got some stocks they want to read. Oh, yeah, C. I just forget. So we'll look at C after this. Yeah, if you guys got any stocks you want me to look at, let me know in the chat. I try and get to all of them, but I do apologize if I don't get to yours because there's just so many. So the Trade Desk right here, they are a CTV advertising company, and they actually just lost basically their biggest customer, Netflix, to Amazon. And we were actually, here's the thing, even after this massive dip right here, the stock is still a little expensive. Like if we look at their price and net income, they're trading at 41.6 times PE, or, that's basically the net income multiple or EPS multiple. They make good net income. But they actually have a lot of increased competition. We were reading this in the Morningstar research. You can read what the bulls say about the trade desk. And what do the bears say? And what are the bears saying? Amazon's demand-side platform directly targets the trade desk's advertising space on the open internet, and it allows it to outcompete on price, pressuring their margins. So Amazon, or actually Netflix, used to use the trade desk. Netflix has like this new ad tier subscription. They were using trade desk to find advertisers, and now Netflix actually went to Amazon and their cheaper network. So I still love them. Great advertising play. That part is it just might still be expensive and a little too expensive even after this massive decline that it's had. But this is the good news. They still make great net income. Look at this. They're easily making, if you average it out, like 100 million net income a quarter, and these growth rates are good. Yeah, it looks like, and cash flow did decline a little bit, but they're investing a lot in the future. They're paying off debt. Interesting name there. Yeah, they're at the same price as they were back in 2020. Another big, if you like an advertising play, I love Meta as well as an advertising play. But yeah, hopefully that was helpful there. I just kind of bearish on them, so I do apologize. But I just try and say the honest thoughts. So SE stock, and then EDG for after this. No, actually, let me DAO after this. No matter what, we're doing DAO. Which app? Yeah, hey, or this app I'm on. It's in the link tree. This is a brokerage where you buy stocks on. If you want to get this software, it's in the link tree in my bio. That very first link there. It's an affiliate link. So. But anyway, here's SEA right here, or you can just type it into Google. It's a broker called Moomoo. But yeah, here's C right here. I think this is like the Southeast Asia Amazon. The forward PE is a 35. That is more pricey than Amazon. Amazon's at a 29, but the current PE is a 54. And the forward PE being a 35 is like, there's so much expected future growth here. At a 35 PE might be pretty fair. So yeah, they're an e-commerce company, and look at this. 70% of all the sales come from Southeast Asia, and then it's Latin America. So it's like a international Amazon almost. So yeah, e-commerce sales, and they have this fintech, digital financial services, active users right here. Let's see. They got 670 million quarterly active users. Let's see what kind of the AI analysis has to say. E-commerce revenue up 35% year over year, led by Shopee's market leadership in Southeast Asia. Digital finance services increased 60% to 990 million. Digital entertainment bookings grew 51%, boosted by Free Fire's collaboration with Naruto. Interesting little name there, stock. And look at this net income down here. They made 370 million net income, after they paid 100 million taxes. So they're really making, these are great triple-digit growth rates year over year. So honestly, this is a nice stock to put. I would put them on the watch list. I'd maybe even start to nibble on them at this price. 35 PE might still be a little high, but with that growth rate and stuff, that's a really great quality company there, I will say. So let's check out DAO here. So $1 billion company exactly. So they're worth $1 billion. They've had a monster performance. They went from $3 to $9 in a year. So they're a learning service right here. Learning services, that revenue is a little flat. How long does this go back? So they have this learning services, which the growth has slowed since 2022. They're also in online marketing services. The growth on this one has been great, though. That's up 23% after grew 68 after grew 70. So that's actually seen some nice little growth there. Yeah, look at that on the annual basis. That is, so the one part of the business is slowing, but the other one's growing. So when we combine the two businesses together, though, the revenue is up 3.6. So kind of mid-lows or single-digit growth rates here. But that might be, first off, this is a Chinese company. Well, first off, we're going to convert the currency from Chinese yuan to USD just to get a better idea here. So Chinese learning company, I don't know. Be careful with this one. Looks like they have some leverage here. NetEase is the largest shareholder. No way. They're also publicly traded. NTES. They're the company that makes Marvel Rivals. Okay. Have you got a Discord or anything? Thank you for I do have. I never talk about this, but if you want to join my Discord, it's in the link tree in my bio. I used to make it free but it's now cost $1 to avoid bots. So one-time $1 fee, and you can join the Discord. I never like to say that. If you've ever been on my stream before, I never like to mention that. But yeah, there's only like 10 people in there, and I like the community small. So if you ever just wanted to, I guess, personally ask me something, I'll always get to every single person's question there. Or if you become a YouTube member, you also get access. But let's see here. Kathy Wood just bought Robinhood. She's been on Robinhood for a long, long time. Should we check out Robinhood stock actually? Ooh, and Seagate. These are all nice stocks here. ISRG. Hey, this is like a medical device robotics company. So I forget what they're called. Those like radiation scanning things where like you have to take all the metal off your body and stuff. I forget what those devices are called, ISRG, but they're the company that makes those, and they also make these like robotic systems. Let's check out, and they have, you're not going to believe their balance sheet, but yeah, their instruments and accessories revenue right here grew very nicely. It's up 20% after grew 20, after grew 20, and they also service these machines. So if we go to the servicing revenue, that grew 20% after 12%. So just nice growth. They're beating on every metric every quarter. They beat on revenue. They beat on EPS massively and on EBITDA. Wow. So no wonder they gapped up so significantly on earnings. And you're not going to believe this. This just takes so much risk off the table as well. This balance sheet right here, they in net cash, they literally have $4.9 billion of cash. So they have $5 billion of cash and no debt, and they're earning interest on it. Literally 80 to 90 million of interest on their cash a quarter. I mean, they're keeping their cash in the 1 to 3 week treasury bills. They were in short-term investments. So no wonder they're printing interest on it. It's crazy. Hey, see you again, Jeffrey. Thanks for all the support. I appreciate that. So, let's actually check out Robinhood stock. I do own Robinhood. I'm up a crazy amount on them. I'm up like almost 10x on Robinhood. But how are they doing? Yeah, so they are up in the overnight market. I regret every share I've ever sold in them. I used to own like way more shares. We sold 50 shares at $36, and I sold it for a 3x gain, but now, it's up 750% for me. But Robinhood right here deserves all the hype around them. Their financials are phenomenal. If we go to the revenue grew 100% year over year, after grew 36%. So phenomenal revenue growth. But check out this revenue. The revenue was $1.27 billion. Out of this $1.27 billion of revenue, they netted $550 million. That's after they paid $80 million of taxes. They really netted $550 million. So their net margin is a 44%. And that's crazy, the net margin Robinhood keeps. So I was just doing the math and looking at this. So Robinhood, whenever you go just buy $100 of a stock, if you could buy $100 of a stock or sell it, they keep 10 cents. They make 10 cents. But whenever you go do a option transaction, they keep, or not an option, a crypto transaction, they keep $1. So they have a 1% spread on that. And whenever you go do this prediction market stuff, and they just added this stuff, whenever you go do a prediction market contract, they keep $2, a 2% fee. And so it's 20x more valuable than a typical contract. So in the day the Robinhood CEO tweeted they had like $6 billion in contracts traded, like and they have the Robinhood Gold subscription. So I am a shareholder of Robinhood. I'm also a shareholder of Webull. I'm a shareholder of SoFi. I'm a shareholder of Moomoo. I'm a shareholder of Webull. Like I'm a believer in the fintech and brokerage industry. So I own all these names. Robinhood, SoFi, Futu, Dave, T-Row. Actually, T-Row I might kick the can to one day, but we're up 17%, not even including the dividends. They have a 5% dividend, and I've owned them for a couple years. So we've got a 5%, and we're up 17% on just the stock appreciation. Yo, try not to spam there. What up, haha? We will definitely get to Meta. Don't worry about that. And no way, Austin, dude, with the freaking SpongeBob gift. I really do appreciate that, man. If you got a stock you want me to look at, let me know there. But yeah, someone said Kathy Wood just bought Robinhood. That's why we were looking at them. Actually, we can see the Kathy Wood portfolio. We can see if she just bought more of them, actually. But yeah, Robinhood is 3.7% of their portfolio. We can actually see all of Kathy Wood's ETF. Oh yeah, net buys. You're right. Look at this. Net buy, Robinhood. This was, that's crazy. And that's in the, what's about the 30 day? What have they been net buying and selling? 30 days, they bought some Circle as their biggest buy. Exact Sciences, yeah, they've been dumping Exact Sciences and GitLab because those have been kind of trash. But that actually, that combines all of her portfolios right here. There's the ArcQ Robotics ETF that's been buying Google. They're selling Teradyne. That's a great robotics company. Anywho, Meta. Let's do Meta right here. So I do own Meta as well. Hard to buy a hood when Futu exists. Yeah, dude, I actually have been buying more of food too. Check this out. We bought one, like this is literally December 8th and December 2nd. We bought 2 shares at 169. Look at this. My original buys are at 105. I don't mind raising my cost basis. I just bought a share at 171 on food too. This is like the better version of Robinhood, in my opinion. That's actually, so that's there's also this brokerage right here, publicly traded. So this app we've kind of been using this whole time right now, it's them publicly traded. So maybe we can look at that stock if y'all want me to. I also have been buying Webull. But anyway, here's Meta right here, a great Mag 7 dividend growth stock to never sell. If we look at the forward PE, it's a 21. I mean, for Meta, that's a great valuation. And why are we looking at the forward PE? Because this quarter, if we look at the EPS, it says it was $1.05, down 82%. Again, EPS is just net income. This is not real. This was a one-time adjustment. It says they made $2.7 billion. They had a one-time tax charge from the big beautiful bill thing. So one-time expense. So you really look at the operating profit. Hopefully the Wi-Fi didn't just like bug on me. Well, there we go. Yeah, it was a record Q3 profitability quarter when you exclude it was a $16 billion or $15.9 billion one-time tax charge. So nothing related to anything else. But yeah, the core business record Q3, first ever quarter with 50 billion plus of revenue. Another thing being questioned is their spend on AI. They're spending 20 to 25 bill a quarter, but that's what I love about them. They're kind of like an Amazon where they can afford to spend all this money on AI right now. They did lower their spend on the metaverse, and we can actually see the metaverse sales. They haven't been great, or they've been flat since 2021, but they're reducing their expenses there. Anyway, I love their Meta Ray-Ban glasses. I love Instagram, Facebook, WhatsApp. They're introducing ads to WhatsApp after they acquired them, and their original slogan was no games, no gimmicks, no ads. So anyway, yeah, the free cash flow is nuts. See, the cash flow is 30 billion, but when we go to the free cash flow, it's 11 billion because they're spending so much on AI right now. And another thing, with their new Prometheus Bond data center that they're opening, they now, for the first time ever, Meta actually has a net debt position for the first time ever. So, hey, Hades. Oh, Brian, I'm so behind here. We'll get to Seagate and LRN. Yo, you still hear Hades, but check out LRN too. Follow Nancy Pelosi and you'll be good. She seems to never miss. That's true. And we can actually see the Pelosi portfolio. So here's Seagate Technology. The forward, here's the thing. If I was a shareholder of this stock, I would not be trimming or selling because the forward PE is a 24. They're trading at 24 times forward or next year's net income, even at all-time highs. So that implies to me that this is the kind of stock that, in my opinion, is just going to continue to climb higher. Yeah, look at these EPS projections. The EPS is going to go from $1.50 to $2.57. So, and this quarter they expected $2.08. They did $2.40. Every quarter they beat on their expectations. So what's it going to be if they beat on expectations? Sales are up 21. Profits are up 75. Whoa. The margin expansion here is crazy. The net margin went from 14 to 20. That just adds money to the bottom line. They're deleveraging. Yeah, the liabilities used to be over 100, and it was 116% of the assets. Now it's only 100. So everything there is heading in the right direction. That's great one there. Oh, actually, let me check out SoFi right here. Then we'll get to LRN. Hey, what up, men? Sorry if I'm missing stocks here, like XPing. What's their ticker symbol again? Actually, it might just be XPing. I'll find it. Don't worry. So here's SoFi. I am a shareholder of SoFi, another stock I kind of regret every share I've ever sold off, but they're expensive. I wouldn't buy the stock here really definitely with not anything meaningful, but the forward PE is a 48. They certainly deserve some sort of high multiple because of their insane growth that the analysts didn't even expect this. If we go to their financial services specifically, this growth is just nuts. It's up 76% after it grew 100. After it grew 141 and after it grew 290. Like they're continuing this growth. The sales were 420 million just this quarter. Look at this kind of on an annual revenue growth basis here. In 2020, the revenue for the whole year was 11 million, then 50 million. Then for the full year 2023, the sales were 430 million, and they literally just this quarter did 420 million. Like the growth is nuts, and we can see the analyst expectations. Every quarter, they beat like crazy on the expectations. They beat on revenue, they beat on EPS, they beat on EBITDA, and that's why I think people are starting to take SoFi serious. Sadly, they're really expensive, and I would not really buy them here, but they deserve all the hype around them. And if I was a shareholder, and I am, I would not really be trimming or selling. All right. MU, please. Yeah, Micron. This is another stock. We looked at Seagate. This is another stock that's at all-time highs right now. They're at all-time highs, and the forward PE is a 13. A 13 forward PE. That's why I would not be selling. December 17th is earnings. So, hey, they report earnings this week. That should be very interesting to watch. So in 3 days, we get earnings from them. We can see their cloud memory business has been growing. Year over year, that comp is crazy, 250% growth year over year. Well, remember you saw the 13 forward PE? That's because the EPS is literally going to go from $1.40 to $4.50. And literally next quarter is going to be $3.80, then $4.50. The net income growth expected is absolutely insane. They did 3.2 bill of net income this quarter after they paid $400 million of taxes. Like, they really did make that. The sales, the revenue, the lifeblood of the company. The revenue is, it's up 46% year over year after it grew 93%. So the top line growth is just as, everything there is just heading in the right direction. So yeah, there you go. Do you regret selling MU? I've actually never owned MU stock, but I wish I kind of did own them. Is there any stocks that have crazy growth that have decent prices right now, like MU or Sterling? Yeah, hey, MU. Haha. Yeah, MU's a nice one. Crazy growth. There's a lot of stocks with crazy top line growth, but not like real sustainable bottom line growth. And hey, Josh, no way, dude, Josh, thanks for that gift there. I do appreciate that. LRN. I typed it. Wait, LRN. LRN. Let me see if I can find this stock, or it's probably just my Wi-Fi that's bugging. Oh, there we go. Stride. We found this stock right here. So, oh wow, this company tanked. Maybe it tanked. Is this one of those payment providers, like transaction companies? Let's see here. A technology-based educational company. Third-party curriculum software. Okay, so they're not what I thought they were. Let's see what they've been reporting. So, revenue looks good at first glance. The sales are up 12% year over year. After grew 14, after grew 13. So the sales are going nicely, and they're net income positive. They're easily making, 50 to 100 mil in net income a quarter. What did that comment say? Yeah, I wonder why the stock is doing so bad. There must have been some sort of bad news on earnings that day, but I don't know what it was. What's the forward multiple? Let me check that. LRN or forward PE is an 8. So they're trading at 8 times net income. That's so weird. I wonder what happened to them. You put me onto MU at 62 and I sold it at 120. Oh, hey, at least you didn't get out making no money. At least you made a nice little double on it. But hey, of course, none of this is financial advice. Please don't listen to me. Always go do your own research. Dollar cost average, I recommend. But yeah, by the way, I sell nothing. Please watch out for people impersonating me. I have no course, book, WhatsApp. I don't coach. I literally sell nothing at all. So only way to support me if you wanted to is just hit the follow button and follow my YouTube channel if you want. We're streaming on there too. You can rewind it, replay there. Hey, Fairway, what up, man? You said Oracle data center delay. Yeah. How's Oracle doing in the overnight market? They're down 0.25% right now. Not too bad, but yeah. Actually, here's the thing. If we go right here, Oracle delays OpenAI Stargate data centers, and they say it's due to labor and material shortage. But actually, just a few hours ago, I read this article. Oracle pushes back on the OpenAI data center delay claims. So they're actually trying to counteract this to prop up the ecosystem right here, which is great. This is a pure cloud play. They have the fourth largest market share. It's AWS, then Azure Cloud by Microsoft, and Google Cloud, then it's Oracle. I like my cloud plays via the other stocks. This one is highly leveraged. They have too high of a dividend payout ratio for me to like. 35 PE isn't nuts, but literally Google and Amazon are both significantly cheaper cloud plays. And I think they'll be just as growthy. Hey, Josh, dude, he said, love the streams. Hey, I appreciate that, man. And then we'll check out SMX and, hey, Looney, remind me to get to Western Digital too. Hey, and MSCI, hey, we'll get to this one first. Thanks again, Josh, for all those roses, and Cyan Love for the gift there too. No way. Thanks for that gift. If you got a stock you want to look at, let me know there. And UiPath, hey, what up, Bobby? I saw UiPath too. I want to get to UiPath and MSCI. So here's Kroger right here, your grocery store. I think they lost net income this quarter. It might have been a one-time adjustment. Let's see. So it says they lost $1.3 billion in net income, and they really did. They actually really did lose $1.4 billion net income. So it's a slow grower. If we look at the sales growth, 0.6, 0.08, negative 0.3, -7. So that doesn't beat inflation. So the top line growth is gone. But look at the forward PE. They're trading at 13 times next year's net income. So let's see if we can figure out kind of. I wonder. I remember saying the CEO is cutting prices or is cutting input costs so they can cut prices on products for consumers. So Kroger scene is like I always have like some really low prices there. Um, but yeah, it's a tough margin business. Like, look, normally they're lucky to get a 2% net margin. Grocery stores are really tough. I like Sprouts Farmers Market here. Looks like Walmart and Amazon are maybe eating their lunch. I don't know. I'm sure maybe anything. I don't know. I don't know. So let's see. SM or wait, Eric, what is this one? MLFNF. Hopefully I can find this one for you. So that's Maple Leaf Foods. I can't view that one. Maybe it's a different ticker symbol, but we're not able to view that one. SMX Security Matters. Wow. So this stock is at an all-time low because of all the reverse splits. This one share used to cost $20 million. That's what happens when you do a million reverse splits. So the whole company's worth $190 million. What's their and they're losing a lot of net income every quarter. So they have revenue. They have no revenue either. So it's a revenue-less company losing a bunch of money. So I looks like there's some momentum around this one. That's good news, but this is not the kind of company that'll really have a sustained rally. So almost definitely get sold off, and I would trade that one. I definitely wouldn't just diamond hand that one. I would trade that one. How do you like Moomoo as a brokerage? Yeah, hey Skip, this is my favorite brokerage right now. Yeah. Oh, I'm so behind here. Late stream. Yeah, hey, actually, we stream every Sunday at this exact same time. That's the only time. It's every Sunday we stream at 8 p.m. when the market opens. So MSCI, let's do this one right here. MSCI right here. So this is kind of like an ETF, like data manager kind of, or like market or indexes right here. Let's see how that's growing. So yeah, this is their ETF business where you've probably heard of the MSCI ETFs, like the international ETFs is where they mostly are. But every time, they basically collect royalties from this business. So they have that business, and then the analytics, like data, that's up 5% year over year. Let's go. They print net income. Check this out. Here's their bottom line. They're easily doing around, actually above that, over 300 million of after-tax net income. Yeah, that's after they pay 100 million of tax. Like they really are making 300 million net income a quarter, and you get a nice yield, a 1.3% dividend yield. They raise it. Wow, that dividend growth is insane. A new record every year. So yeah, hey. Let's go see how much what's the forward PE? Actually, are they expensive? So they are, well, not crazy. 32 forward PE, not crazy expensive. Interesting name there. It still has a nice yield. The stock has been flat for a while. It's the same price that it was in 2021. I think S&P Global has also been a little flat. Hey, what up, man? What up, Isaiah? Good to see you, man. Yeah, hey, we'll get to PSIX in a minute here. That one is really cheap. PSIX is very cheap. I do own PSIX. I would not own that one as a big size position, to be honest with you. And I don't, I got 5 shares in them, but they're pretty, I'm down 0.6%. So we're basically break even on our shares right now. And the PE, the forward PE is a 12.8. Like that's a cheap valuation. It's a very small company, a $1.45 billion company, but look at these net income growth rates and net income numbers. That's what I love to see. But I keep the allocation very low on them. Okay, VOO or QQQM. Yeah, hey, QQQM is my favorite NASDAQ 100 ETF. What's this brokerage? Yeah, hey, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. Yeah, if you want to buy stocks, it's where they ask for a bunch of information, send you a text form. Actually, by the way, all these brokerages are all in the link tree in my bio. If you wanted to get any of these are all apps where you buy stocks on. They all send you a text from everything just because how stocks work. But anyway, they're all in the link tree in my bio. They're all affiliate links too, full disclosure. But my favorite one, they're all linked up there. My favorite one is the very first link in the link tree up there, the one I'm on right now. Lowest fee, no fees, best analysis tools. Anyway, here's QQQM. This is the NASDAQ 100 ETF with the lowest expense ratio. So it's literally, I kid you not, it's the exact same thing as the QQQ, but with the lower expense ratio. You save, for every $1,000 you put in, you save $25 a year in expenses by buying this ETF. It's the exact same ETF, exact same NASDAQ 100 strategy, exact same manager by Invesco. They just market QQQ because that's how they make a lot of money. Why would they market QQQM and tell people about it? But yeah, here's my portfolio. Yeah, up 0.22% in the overnight market right now. All right. All right. Let's see here. Yeah, hey, no problem there. Vicky said Zim stock. This is your shipping company that really benefits from whenever there's war fears and supply chain logistics issues. Like, does anyone remember in 2021, 2022, when the price of like one cargo container went from like $1,000 to like $11,000, and this company was printing money? So they actually have a rule where they pay out like 50, whenever they make net income, they pay out 50% of that to the shareholder. So notice the past 2 quarters, they barely made any net income. So the dividends have been extremely low. And sometimes they don't pay a dividend. But look at what happened in 2022. I kid you not, this is insane. That year in 2022, they paid out $27 in dividends. The current stock price right now is $18. So they literally paid out. So what's the market cap of this? The whole company's worth $2.2 billion. That year, they paid out over $3 billion in dividends. If only they kept that money. But actually, I'll verify that. Look, here's the cost of the dividend. Let's go to annual right here. Oh, it reset it. Let's go to the bottom here. The dividend, look at that. In 2022, they paid $3.3 billion in dividends, $760 million, $570 million. So whenever they make money, they pay a dividend. But right now, the revenue has been a little choppy. Yeah, the revenue's down 35% year over. So anyway, they're a shipping company, very cyclical. And Happy Bull said ET. This is Energy Transfer. Hey, we'll look at Astera Labs and Credo. Actually, Credo's an interesting one. What's your watch list of stocks for this week? Ooh, we'll check that out too. I don't really have an exact watch list, but I'm watching like Uber. I don't really know. But here's Energy Transfer. This is a stock. This actually isn't a stock. And that's what, this is my quick warning. I accidentally bought one of these when my first year investing. This is actually an MLP. An MLP stands for a master limited partnership. And you're actually buying units of this. And since it's an MLP, you're not a shareholder, you're a partner in the company. So they literally send you at the end of the year a K-1 tax form, which are notoriously hard to fill out, costing me $200-$300 with an accountant my first year. But look at this right here. Because they're an MLP, they have crazy high sustainable dividends. An 8% dividend yield, that's totally safe. The stock is the same. Actually, the stock is the same price that it was in 2018, technically, but you get the nice dividends every year. I just don't like the MLPs because of the complications around that tax form. So I don't like the K1s. Yeah, I accidentally bought like 2 MLPs my first year investing because I didn't even know what they were. So Credo Technologies, this is actually a company, this is actually very interesting, headquartered in the Cayman Islands, or the Marshall Islands specifically, but the Cayman Islands. So what that means is they pay, and they've never paid any taxes. They don't pay taxes. That's why their margins are so high. Let's see what, they have incredible numbers. Let's see what the earnings hub has to say here. Oh, they don't have anything to say. That's okay. But check this out right here. The orange line's what the analysts expect. They beat on every expectation every quarter. They beat on revenue. They beat on EPS. And they beat on EBITDA. Triple beat quarter. The revenue was up 272%. After grew 63, massive growth. Out of this 268 million of revenue, they netted 82 million of net income on that. Look at this balance sheet, man. They have 813 million of cash, no debt. The cash is also earning them interest. So Credo is just the cash flow is also at a record, but they are headquartered. This doesn't really mean they're headquartered in the Cayman Islands. That's why some of their margins are really high. Why is Moomoo better than Fidelity? Or it's just, are you using Moomoo? Yeah, hey, if you want to, this is a brokerage called Moomoo. Yeah, if you want to get this app or use my affiliate link, it's in the link tree in my bio, very first link there. My favorite brokerage to buy stocks on, just has super useful analysis tools. Actually, all these are brokerages where you buy stocks on. They're all in the link tree in my bio. Like I use Robinhood, like any brokerage you can buy stocks on. So I guess that it's not better in that sense, but it's better because of all the useful analysis tools that I think that it has. And if you already have a brokerage, I don't even mind having multiple brokerage. I have 3 different brokerages here. It's just an extra already filled out sheet of paper, one extra little mail to the IRS. So it's no big deal. I love this brokerage right here. All right. CoreWeave, yo, what up, Happy? Actually, CoreWeave, they're in the NVIDIA portfolio. Yeah, you can actually see like all the cool people's portfolios right here. Like, I don't actually know Gil. I don't even know who some of these people are. But anyway, We can see the NVIDIA portfolio. NVIDIA takes stakes in individual stocks as well. And one of the stocks they have a huge stake in is CoreWeave. They have a huge backlog. I'm talking, let's actually show this right here. Their contracted backlog doubled quarter over quarter to $55 billion. And that was fueled by large contracts, including a $14 billion deal with Meta and a $6.5 billion expansion with OpenAI. But on the other hand, their margins were below expectations at only 4%, impacted by delays in third-party data center deployment. So they actually, this quarter on earnings, lowered their guidance by $200 million because of these delays, kind of what Oracle is experiencing right now. But what I love about CoreWeave is the top-line growth. This is incredible top-line growth, triple-digit growth for the past 3 quarters. It's at $1.36 billion this quarter. And analysts are expecting literally in 2 quarters, $2.3 billion in revenue, huge backlog. I just don't, they lose a lot of money. And in the long run, they're kind of the bag holders because they're paying a lot of money for these chips and there's the depreciation. And then but like, that's the thing. CoreWeave will still do great for probably 2 to 3 years, like until this is like a higher beta NVIDIA. That's almost like a swing. That's like a swing trade stock or like a day trade stock. It's not one-eyed diamond hand forever. It's not the most quality AI pick because all they do, they're just like Nebius and APLD. They just own a bunch of GPUs in a data center. Like there's nothing proprietary. I guess it's just the contracts that they have are huge, but all these companies don't want to take on that liability, so they basically rent capacity from CoreWeave, like the Google, the Microsoft Cloud rents capacity from them because they don't want to take on that liability. And like OpenAI. All right. Pfizer, I think healthcare might be. Yeah, hey, what's up, man? I do actually own a little bit of Pfizer. I don't love this stock. I really shouldn't own it for my age. I might consider selling out of Pfizer, but Pfizer, actually, here's the bad news. Pfizer stock is the same price that it was in 1997. So if you bought Pfizer in 1997, you are down on your money. But here's what I find fascinating. Pfizer just acquired this company for $10 billion. So this is fully owned by Pfizer now. This is a weight loss prescription company. So Pfizer is now in the weight loss game, baby. And I think it's safe. They have a 6.65% dividend yield. They already have a 70% payout ratio. And if the EPS forward is a 13, then that. So they have a safe dividend. Here's what you're doing with Pfizer. You're praying for 1 or 2% in stock price appreciation every year on average. You haven't gotten that since 1998. So you've had 0 stock price appreciation every year, but you get a 6.6% qualified dividend. So basically, massive underperformance from the S&P. It's like an interesting dilemma though, where I still own them, but. Yeah, Coasting said Cisco just recovered from the dot-com price, and they deserve it too. Cisco actually has great financials now. But yeah, look at that. Here's the price that it was in 2000, $75, and now it's finally back. Cisco is a fair multiple, a 25 forward PE after their Splunk acquisition. I love them. Hi. Hey, what up, Logan? Powell's on my watch list. What do you think? Yo, I freaking love Powell. Oh, yo, Eric, my bad. He said PayX. Are you still in here, Eric? Well, if you're here, we'll check out PAYX, or which one should we look at? Or LYG, or which one do you want me to look at there? We'll check that out too. Okay. What got you into investing? Basically, losing my job. So I wanted my money to work for me. Okay. AMBA or CEG? Well, here's CEG right here. CEG, this is the best utility company in my opinion. Unregulated utility. They're the #1 nuclear reactor play. They literally own 30% plus of all the US's nuclear reactors. Largest pure play for nuclear energy by far. There is no close second, and they're in such demand right now from data centers wanting this clean energy. And they also just acquired Calpine. That Calpine acquisition is adding $2 of yearly EPS. So the forward PE is a 28. That's why CEG, I'm certainly not selling. I'm up like a crazy amount on them. It is still a tough buy today, but I wouldn't sell them either. I've never sold a single share. We're up 72% on them. And we've been literally, oh, look, there's our history. Just a bunch of dividends for the past year. We haven't bought or sold any shares in the past year. We've just been diamond handing them. So yeah. All right. Let's see here. C stock? Are you talking about just like not Citadel, Citigroup? Let's see here. Citigroup, whoa, look at them. Citigroup is actually at an all-time high right now. So congrats if you own this one. And not only are they at an all-time high, but you also have gotten a 2% dividend every year. So you get a 2% dividend. What's the forward PE? So the current PE is a 15 and the forward PE is a 12, which just implies to me that this is the kind of stock that's just going to continue to climb higher, I think. So they're in markets, services, United States, personal banking, wealth management. So nice diversified income streams. They're beating on expectations every quarter. That's kind of the orange line there. They beat on revenue, beat on EPS. So yeah, 3 to 4 billion net income a quarter. That's great. How you screener your stock? Or I'm not sure what you mean there. What app do you use? Yo, hey, what up, CK? I made my first 200% trade. Oh, yeah, here, if you want to get this app I'm on, this is my favorite brokerage. It's in the link tree in my bio, that very first link there. It's an affiliate link too, so if you go and like deposit $100, we'll both get like a free stock. But yeah, my favorite brokerage. You can just type it into Google, broker called Nathan. So if I'm betting on healthcare, do you think I should go for a stock like Pfizer or an index fund like VHT? VHT, what is that one? The Vanguard Healthcare ETF. Yo, actually, honestly, the safer play would be going with the VHT. If you're banking on healthcare too, maybe my favorite healthcare name is HCA Healthcare. We own 4 shares of them. HCA Healthcare is a monster. But yeah, if you don't know which individual healthcare name to buy, check out the VHT. This ETF always just gives you like 7% of your money back a year. Eli Lilly, AbbVie, Johnson & Johnson, United Health. Actually, United Health was slowing down the ETF for a little bit there, back down here. But anyway, yeah, VHT is a great safe one. Flora Growth. Hey, if you give me the ticker symbol, we actually sadly cannot cover that industry. But if you guys got a stock you may look at, give me the ticker symbol there. Christian said NVIDIA. You know what? We'll look at NVIDIA after this. I wanted to get to, Regeneron. Yeah, Regeneron. I really like this pharmaceutical company. And hey, Happy Bowl. No way, I didn't even see that, dude. Happy Bowl. Thanks for all those gifts there. No way. With the huge SpongeBob gift. Dude, I didn't even see that. My bad there, Happy Bowl. No way. Thank you so much there, Happy Bowl. If you got another stock you may look at, let me know there. That was crazy. So here's Regeneron right here. The forward PE is a 21. I think that's fair for this company, a 21 forward PE. Now, one of the reasons why the stock tanked, it went from 1,100 all the way down to 490, is because some other company made an ILA product. They basically they used their recipe or whatever, and Regeneron took them to court, and the courts found that they did not the patent expired or something, and now anyone can just sell this ILA as like a basic thing. So the sales, look at those declines. That's not great. But here's what I like. If we go to their collaboration revenue, this is starting to pick up. Great growth. It's up 18% after it grew 15% year over year. So that's seeing some nice growth. They also have like these other prescriptions like Labateo. That's 200 mil of revenue. That's up 12%. Other revenue, that's up 73%. So they're diversifying away. And if we go to their bottom line, they're easily making, if you average it out, over $1 billion of net income every single quarter. So pretty cool. Working for HCA is a nightmare. Oh, the HCA healthcare. Yeah. So HCA is, some people don't like it for its ethical. It's a for-profit hospital group right here. HCA. But you wouldn't believe, I don't think I've ever seen a company with more impressive financials, like ever. I can't believe it. They buy back like almost 10% of the company a year, plus a dividend. But I have so much good stuff to say about HCA Healthcare there. Maybe we'll go over them if y'all want me to. What up, Gus? Just sold Walmart to buy STX. Hey, I wouldn't completely sell out of Walmart. Because that's just a good one to never hold. It's recession resilient a bit. But yeah, STX certainly looks cheap. LUV, is that Southwest Airlines? So I don't love the airline industry. But yeah, they still haven't recovered from, the COVID price. So Southwest, yeah, is the same price as they were back in 2014. So the stock hasn't done too well, but the stock has done great the past couple months here. Look at that. It's really ticked up here. Let's see what the net income is. So yeah, the net income's still a bit choppy, it's like negative 20%, negative 40, but then plus 30. So it's a bit choppy of net income. That's actually, yeah, it's a tough one, especially during COVID. This one was just like all the airlines were losing a lot of money. But actually, if you average it out there, they are making like 400 mil of net income a quarter or a year. I mean, what's the forward PE? It's a 17. That's not nuts. A 17 PE, but this is just not the kind of stock that, in my opinion, will ever outperform the S&P 500. Maybe temporary, kind of how it is now as like a travel trade. But yeah, there's funds out there that literally remove the airlines and the cruise lines from the S&P 500, and I just don't love the airline industry. Federally regulated, low margin, and it's tough. Are you on an Apple iPhone? I am on an Apple iPhone. Hey, what up, Hassan? Said MU. Yo, I love MU stock. Um, HCA is one of my biggest holdings. Yo, actually, let's go over HCA really quickly. Here's one of the crazy things about HCA. It's just a safe stock that I think should give you, honestly, 10% of your money back a year. That sounds like not financial advice, of course, but check this out right here. This is the thing I love. You won't believe this. I've never seen another company have more impressive than this. Look at their total common shares outstanding year over year. Check this out in the bottom left. There's 229 million shares that exist. That they've bought back 9.69% of the shares. Same time last year was 254, and that's after they bought back 5.4% of the shares. After they bought back 4.9, after they bought back 10.4, after they bought back, another 1%. So here's 2020. In 2020, the total common shares outstanding were 337. So we're from 337 to, in the most recent quarter, 227 or 229, I mean. But that's insane, the share buybacks. And they also pay a dividend. They can easily afford to do these buybacks too. They pay a dividend. Look at this. The dividend only cost 166 million, and the cost of the dividend is going down because they're buying back their own shares. Whenever a stock, here's what buybacks do, if you're wondering, whenever they buy back their own shares, it makes the EPS go up, it makes the PE ratio go down, makes the dividend cost less, and it gives you more ownership in the company. So in short, it just forces the stock to go up. Check out the net income growth. So like I'm saying, it makes the EPS grow higher. So the net income grew by 28, net income's up by 28, but net income per share is up by 42 because they bought back so much of the shares. So remember, the dividend cost 190 mil. They made 1.9 billion this quarter, and the free cash flow, and that's 690 of EPS. The free cash flow per share is $19. The record free cash flow like ever. Same with EPS. I can't explain how great HCA Healthcare is. For-profit hospital group, but look at this right here, beating on all expectations. In the most recent quarter, analysts expected 18.5. They did 19.1. They expected 570. They did 690. 2.5. Anyway, let me stop ranting on them. I'm totally biased because I own them, but I don't even mind buying that stock at all-time highs, and I did buy them at all-time highs, most of my position. Aaron, what up, man? He said ACM. Let's check this one out. ACM. Hey, Breek, what up, man? What's up, Breek? I love how fast this is. I have to learn. Hey, I appreciate that. Yeah, we try and go quick here with each stock. Yeah, if you guys got a stock, we'll try and run through these. Oh, like Oracle. What up, Mel? And we'll get to Palantir as well. I want to get to all these. My bad there. So here's AECom Tech. They're a $13 billion company. The forward PE is a 17. That's pretty fair. Oh, but they just tanked on earnings. Well, that's not good. Let's go see what their actual earnings report was. So, so they've missed on revenue for the past 3 quarters. Look at that. They had expected 4.3. They did 4.17. So they missed on revenue, missed on net income. Yeah. So that was rough. Well, actually, the EBITDA stayed strong. So the revenue growth is gone. The sales are up 1.5. Last quarter was up 0.6, -4. So that's single-digit growth rate. That might explain why and again, all 3 of these quarters, they've missed on the growth expectations. So, but it's a fair multiple, like a 17 PE. Maybe the risk to reward is pretty decent down here at this stock price. So, and they're still making, 200, close to basically 150 million in net income a quarter still. So yeah, not too shabby. So what app is this? Yeah, hey, actually, yeah, if you want to get this app I'm on, this is where you buy stocks, analyze stocks. It's a brokerage. It's actually in the link tree in my bio, that very first link there, my favorite brokerage. It's an affiliate link, full disclosure. So if you go and deposit $100, you'll both get some free stocks. But yeah, super useful. A lot of people like it for the APY and your idle cash and stuff. So let's do Oracle right here. They reported earnings and they tanked. Check this out right here. Oracle went from 225 to 190. So right now, Oracle, part of that was because Oracle delays the OpenAI Stargate data centers due to labor and material shortage. So that was the bearish news. But then a couple hours ago, Oracle just said Oracle pushes back on the OpenAI data center delay claims. So they're trying to offset that. The stock isn't going up much right now. But yeah, they're still a bit of an expensive cloud play. The forward PE is a 35. That is expensive. But yeah, cloud play. They have the fourth largest market share. AWS is number one, then Azure, then Google Cloud, then Oracle. And they are a bit leveraged. They have over like $115 billion of total debt, which is unfortunate, but they make good net income. Actually, this was a one-time adjustment. They didn't actually make $6.14 billion, so that's why the analysts expected $1.17 and they did $2.10. They actually did $1.17. So anywho, they made pretty much the same as last quarter. They're making $3 billion in net income a quarter. So remember that they're making $3 billion in net income a quarter. Well, they don't actually, because they also pay a dividend. The dividend cost $1.44 billion. So they're only netting $1.5 billion net income a quarter. And they now have $99 billion of total long-term debt, which is the nasty stuff. $8 billion of current debt, $15 billion of capital lease obligations. They have a huge backlog, like a 300% backlog from like OpenAI and but I think it's too expensive. I don't think it's worth meaningfully buying the dip yet. Like maybe the nibble, but I sadly think that this one might go lower before it goes higher. So I would, I like Amazon, AWS, larger market share, and it's a cheaper valuation, a 29 forward PE. While it's obviously not a pure cloud play like Oracle, I like Amazon. I love Google Cloud. I love a lot of these. Microsoft, Azure Cloud, they're a great one. Player One said, what stock should we buy this week? That's a good one. I don't know. There's a lot of cheap Mag 7 stocks like Microsoft. This is why we're not in bubbly territory. This is why I think like there's so much upside in the S&P and just the whole market. Why if the bubble is pop, or if this is peak bubble, then I just can't believe it. I can't believe we're far from peak bubble. Like the forward PE on all these companies, Microsoft's at a 29 forward PE, Nvidia 29. I think Google's also at a 29. Amazon 28. Meta's a 22. Like valuations are cheap for the most part. I mean, there's some exceptions like Tesla's nuts. Oracle is a bit high. Palantir's nuts. I love Palantir though. Palantir's a great never sell. Actually, Netflix. Hey, we haven't looked at Netflix in so long. Let's actually look at Netflix real quick. It's another one that's a bit expensive still, but Netflix announces an $82 billion acquisition of Warner Bros., but they actually just got outbid by Paramount Skydance. They did bid like $103 billion. And so if Netflix wants to outbid them, they're going to have to bid more. And it's just even more, it's already decretive to their EPS, this acquisition. It's just going to be even more decretive to the EPS. So that's kind of why the stock is selling off a bit. But, the forward PE of a 30 for Netflix, the subscription company, is so fair. Like people are saying Netflix is dead. Like people still use Netflix every day and stuff. So, they have 300 million premium subscribers. They have this ad tier user. They make did you know on average per month, Netflix makes $11.69 per month per person, per paying subscriber. And so if we go to their bottom line, their net income, they're easily doing $2 to $3 billion net income a quarter. The free cash flow is insane, $2 to $3 billion. And this company doesn't pay a dividend and they don't really do buybacks. And so they have so much cash that they're able to do these acquisitions like this, like a freaking huge $82 billion of Warner Bros. Like that, I guess, be kind of cool to see the Harry Potter stuff on Netflix. But I lost a lot of money on Netflix. Or are you a shareholder? That's what I would not take the loss on. I think Netflix is still shares I'd hold there. Where would you go to learn this? Well, hey, actually, I don't know what you're talking about, learn, but the only way to learn from me is just watch the streams, watch my YouTube videos. I sell nothing. Please watch out for people impersonating me. I sell nothing. I have no course book. I don't coach, literally nothing. So yeah, sell nothing. The only thing I do have though, hard to say what app is I do have an affiliate link. So if you're like, hey, if you want to buy stocks and you want to use this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link if you want to get this brokerage. If you deposit like $100, we'll both get some free stocks, but you don't even have to use it. You can just type it into Google, brokerage called Moomoo. We also, by the way, all these brokerages are all in the link tree in my bio, like Robinhood as well is another one. Weeble's up there too, the third link. They're all affiliate links. So if you go and like deposit money on these, we'll both get some free stocks. But you don't even have to deposit money. They're just useful analysis apps. Anyway, yeah, my favorite one, very first link there. But let's see. Can you do ALAB? I think we already did them, but maybe we can do them again. Astera Labs. Yeah, so yeah, they fell on their ARM partnership a while back. Let's go look at the Visa and MasterCard have been on my list for a long time. Not sure which one to get. Yeah, it's honestly, if you look at Visa and MasterCard and you like put their charts on top of one another, the performance is nearly identical. It doesn't matter which one you buy. LYFE Wonders. No way. Life Wonders for the 11 roses. Dude, I appreciate that. What's up, man? So here's Astera Labs, super expensive company, but this company deserves a high multiple. They have a 97 forward PE. Yes, I own a lot of Netflix stock. It was doing good. Dang. So yeah, Astera Labs, 97 forward PE. They certainly deserve that high multiple because check out what they're reporting versus what the analysts expect. They're a growth behemoth, like triple digit growth rate. Like actually, let me see that real quick. Yeah, look at the past 4 quarters. It's triple digit growth rates the past 4 quarters. Actually, past 6 quarters. So they're just on a growth streak. And another cherry on top is this fortress balance sheet. Literally completely debt free, $1.13 billion of cash. The cash is earning them interest of $11 million a quarter of just interest on their cash since they have no debt to pay. And look at this. So the sales are $230 million and they netted $91 million. You know, they used to barely make any money, lose money. Now they've really grown the profits. So as they're just now getting profitable, honestly, 97 forward PE is expensive, but you almost want to do like a 2-year out multiple because they like just got net income positive. But they probably might fall a little more, but I really like them. That's a pure growth stock I'd like put on the watch list. They are nice. Can you do Chaggy? Hey, if you give me the ticker symbol for that stock, we'll check it out. Astera Labs is so volatile. One time it went from 185 to 140. Yeah, that was the day on earnings. I remember that actually. That was crazy. Okay. Actually, should we look at Visa? Hey, Logan, do you want me to look at Visa? I can actually check them out. Yeah, I think Visa is a great one. Planet Labs. I forget what this company does. Amex. Hey, actually, let me get to Amex too. Yeah, my phone's getting a little low here. Planet Labs, let's check this out. Wow, this stock is at an all-time high. Says shares are trading higher after Citigroup initiated coverage with a $19 buy target. Well, it's nearly there. Is there any like news on this company? Yeah, what does this company do? Let me actually go check out their aerospace and defense name right here. Here's their website. What is this right here? Oh, they're like a satellite imagery company, it looks like. Defense. Okay. Let's go see, do they have revenue? They do. Wow. So look at this. Analysts expected 72 mil. They reported 82 mil of revenue. And it's just a straight line up, these expectations. That's great news. That's what you want to see. So revenue's up 32 after grew 10%. They are losing a bit of money, 59 million. Was that from an acquisition though? Let's see. If you go to the cash I'm investing, yeah. So they actually bought a company for like 200 million. Whoa, hold up. I didn't know this. Alphabet, aka Google, is the largest shareholder. Maybe they have like a contract with Google Maps or something. Who knows? But Google is the largest shareholder. That's so cool. Did you guys know SpaceX? SpaceX plans to go public in 2026 at a $1.5 trillion market cap. Did you guys know Google owns 7.5% of the company? So it's over 100 billion of market cap for Google. Like, it's crazy. I didn't know like Google has stakes in a bunch of different companies. Same with like Nvidia. Nvidia has a bunch of stakes in a bunch of different companies like in CoreWeave, APLD. Amazon does as well. All right. Amex, actually speaking of these like super investors, if we go to the Warren Buffett portfolio right here, AMEX, that's not AXP. So that's a different stock right here. AMEX. Oh, so here's I can't find that one unless you're talking about American Express there, Mel. Let me know if that's the one you're talking about. American Express is really cool, but I don't know if sorry about that. Have a long-term stock, 50 to 150, or I'm not sure what you mean there, player. Well, yeah, I just love buying and holding great quality stocks for the long term. I actually have a little portfolio right here. I call this at the top, my safe never sells. These are, in my opinion, doesn't matter the price, like just never sell these, like Microsoft, AbbVie, HCA, Waste Management, McDonald's. These are just safe kind of stocks, I think. That kind of, even if there's I should add AutoZone to that list too. Like even in a recession, these stocks historically do pretty good, or do good. Buy a robot for the long term. Yeah, hey, robotic stock. Actually, one of my favorite ways to get exposure to robotics is Amazon. They have a huge number one robotics play in the world, and they're the number one company to benefit from robotics, like with their logistics networks and stuff. But yeah. BMY, Bristol Myers Squibb. This is a company that sells a bunch of different prescriptions. Kind of reminds me of like a Pfizer. They remind me of Pfizer too because Pfizer and Bristol Myers Squibb are both at the same stock price as they were back in 1998. So if you bought this stock in 1998, it's the same price that it is today. They have a high dividend, a 4.7% dividend yield. Forward PE is a 9.9 forward PE. That's really cheap, actually. So, all right, let's see. They made $2.2 billion in net income this quarter. Let's go see how much the dividend costs. They have a really high dividend yield. Let's see if it's sustainable. So they made $2.2 billion net income, and the dividend cost every quarter $1.26. So as long as they're making over $1.26 billion in net income, they can afford that like 5% dividend. Looks like they had a little one-time adjustment that one quarter. Let's see the EBITDA expectations. Yeah, actually, they've been beating on expectations like crazy. So there you go. Looks like the yield does look safe there. I don't know if that'll outperform the S&P. When do you do your streams? We actually stream every single day. We stream every single day, but on Sundays, today's Sunday, on Sundays, we actually stream twice. We stream twice on Sundays, sometimes twice on other days too, but we stream every single day. If you want to hit the follow button, I really appreciate that. Watch out for people impersonating me. I don't sell anything. And we stream every Sunday, this exact same time. Every Sunday at 8 p.m. we stream. We've been live for an hour and 50 minutes. We're still going to go on for a little longer too. And we already did another 3 or 2.5 hour stream earlier today. I love streaming. So yeah, we're always on here. Ooh, Rich Tech Robotics, good or bad? Not a good one, sadly. So Rich Tech Robotics, wait, Logan, what was I saying? Yeah, Logan, was it Visa? Yeah, we'll look at Visa too. Oh, and American Express, Visa, all similar ones. And Dell, yeah, we'll try and get to all these, sorry. So yeah, Rich Tech Robotics, not a great robotics name, simply because it's just not. They have no financials here. Like if you're looking for a real robotics play to just trust and buy and never sell, this one is not good. You know, they're doing $1 million in revenue a quarter, and the million is down 18% year over year. They're losing a lot of money every quarter, so they have no IP or patents really. So Rich Tech Robotics is just not a good robotics play, but they have a momentum. Like there's still money to be made on that stock if you like swing trade it or something. But nothing's blowing me away there to really like trust and diamond hand that one. So let's do Visa. You know who also owns Visa? The legendary investor Nancy Pelosi. So she owns a lot of popular stocks like Microsoft, Nvidia. She got Netflix too. So hey, but yeah, here's Visa right here. Visa popped up. I actually wonder, was there specific news for Visa to pop up like that? Visa foresees 2026 as key year for AI-assisted shopping adoption. Let's see. Oh, did they report earnings? Wow, there's a lot of freaking news here. Visa reports 11% growth. Visa and Orange Money launched card in Africa and Jordan. You know what? Let's just go look at the actual numbers because that's what matters. Company. Here we go. Actually, did they just report earnings? No, I don't. That wasn't recent. Anyway, let's see here. So here's what's crazy about Visa. Every time you go, all those micro little credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. Whenever you're in like Walmart, you go spend $100 at Walmart, you pay a 1.5% fee to Visa, and so does Walmart. They also pay a 1.5% fee to Visa. And they are print money. Easily $5 billion plus of after-tax net income a quarter. And what is Visa doing with $5 billion of after-tax net income a quarter? Well, they pay a dividend, and that dividend only cost $1.1 billion. So very safe, very sustainable dividend. There's a lot of room for them to raise that. And since the dividend payout ratio is so low, they're doing massive buybacks. Check out the top here. They're doing $4 to $5 billion of share buybacks every quarter. I mean, that's nuts. So, and here's what the share buybacks do for you. Yeah, we'll look at PSIX after this. If you look at the net income is down by 4.2%. So the net income did fall by 4.2, but because of the share buybacks, the net income per share is only down by 1.1. Remember, the EPS growth rate and the net income growth rate should always be the exact same. Only thing that changes is the share buybacks or dilution. But yeah, they raise the dividend every year way faster than inflation because the payout ratio is so low. Pretty cool. Do you think InnoData is a good price right now? Sadly, no. I do own InnoData. I'm a shareholder, but I would not buy it here yet. It's still expensive. It's a stock also I'd keep as a small position. Another stock I'd keep as a really small position is Power Solutions. I do own this one. Check this out. It's our second smallest holding in here. We have 5 shares of them. We're down 3% on our shares. So I really like this company though. They're a cheap company making good products. Very low market cap. If the whole company is worth $1.4 billion and the forward PE is a 14, so it's not expensive, a 14 forward PE. And look at this net income that they're making, the net income growth, or actually they had a little one-time adjustment, but they're printing net income. Well, 20 to 30 million of, after-tax net income every quarter. So I like the net income growth. The top line growth is good too, 62%, 73, 40, 40, but the margins have been coming down. So look at this. Here's the gross margins. The gross margins fell 17%, and net margins fell by 1% year over year. But here's the thing. They missed on that, but they still beat on every expectation. They beat on revenue, they beat on EPS, and they beat on EBITDA or EBIT. So it's a fair one. I have a very small position in them, and I like it that way. I wouldn't want them as like a super mega sized position in my portfolio. Actually, let's see how the market's doing real quick. What's up? UiPath is up. Dave is down 1%. How's our Robinhood portfolio doing really quickly? Yeah, the overnight market's open. CEG's up 1. United Rentals up 1.3. No way. Yeah, look at that. The Qs are now at 0.29. That's a new intraday high right now on the Qs. Let's go. That should bode well for tomorrow. Who knows? Knock on wood. But anyway. How do you know if a balance sheet is good? There's a lot of metrics to take into effect because when we look at McDonald's balance sheet at first glance, you would think if this was any other company because of their real estate asset and their royalty structure, these intangible assets that aren't included, this looks really bad. But McDonald's is a great balance sheet. Let's see. It has to do with buybacks and crypto earnings. Hey, what up, Static? Let's do UNH right here. I don't love this one. I don't understand this one too much. Well, I do, but UNH, their margins are getting hurt, and there's a lot of future uncertainty. So that's why if we look at the current PE ratio, or here's the PE ratio at the top here, they're trading at 17.8 times PE. But the forward PE is a 22, so their net income is expected to fall. So they're trading at 22 times next year's net income, even though they're at 17 times current PE. Basically their margins are gonna go down forever because they're no longer basically overbilling the federal government, and it's not just them; it's kind of the whole industry. But yeah, if we go to the revenue's up by 12, so sales are up by 12. But the business, the net income, the profits fell by 59, and they really did fall by 50. So the margins are really being hurt here, and that's what we really got to watch on UNH here. Gross margins down 20, net margins down 63. We're a customer, we use OptumRx. Buffett bought the dip on them. Berkshire Hathaway, actually I should say Berkshire Hathaway. I don't know if Buffett is directly involved in that, but they bought the dip and they sent the stock up that day. It's probably fair. I don't know, man. I mean, 2.5% dividend. I just don't love this one right now. Oh, dude, see, when I look away from the chat for 1 second, we get a guy to spam. Oh, my goodness. All right, let's see here. Oh, Carmen, hey, what up? We'll look at KRMN, and someone said what app is this? Yeah, hey, if you want to get this app I'm on, it's a brokerage where you buy stocks on. It's my favorite one. It's in the link tree in my bio, the very first link there. If you're on the YouTube stream, it's actually in the link in the description. Yeah, you can just type it into Google, though, a broker called Moomoo. But if you want to use my affiliate link tree in my bio, yeah, useful app to buy stocks on, I think. Okay, let's go. UNH, I have a huge position and a dividend on the 16th. Yeah, the dividend appear to be safe. We're having a Sprouts. Hey, let's do Sprouts right there. Hey, my bad there, Aiden. I was wanting to get to Sprouts. Thanks so much for still being here, Aiden. So Sprouts Farmers Market is one that I'm down bad on. They're actually my biggest loser right now. Check this out. We are down 38% on Sprouts Farmers Market, but I wouldn't dare. Actually, look, you can see my little buy orders down there. I've been buying the dip. Unfortunately, it hasn't lowered my cost basis too much because we were buying long time ago. But anyway, I love Sprouts Farmers Market. The valuation is a 15. They trade at 15 times net income. And for these grocery stores, you really focus on it's a net margin game. And their net margin for the industry is so good. They're more of like a healthy oriented grocery store. They're making 5 to 8% net margins. It's crazy. 100 to Dude, they make crazy net income and the margins are crazy. And what are they doing with all that? Because they don't pay a dividend. That's what I like about them. Like Costco, Walmart, Kroger, they all pay really high dividends or kind of high payout ratios, but they don't pay a dividend whatsoever. So they do massive share buybacks. Check out the total common shares outstanding in the bottom left. There's currently 97 million shares. When the same time last year, there was 100 million shares. That's easy math. They bought back 2.6% of the company, but that's just in 1 year. So there's 100 million shares. Let's go to 2019. Not even that. Right before COVID, there was 100. Oh, that's even after they bought back 6%. There's 118 million shares. So from 118 million to now 97 million. So it's a huge share buyback company, and that's still growing. Like the EPS is growing, but the analysts aren't expecting the EPS to basically grow at all. The current PE and the forward PE is the exact same. So maybe, honestly, they deserve a 15 PE for a company that has no EPS growth. But that might be why, because the growth was lower than expected. That would be my guess. But because, they slightly missed on revenue, but they beat on EPS. They beat on EBIT. So anyway, Sprouts Farmers Market is not one I'd sell. Right. Let's see here. They're going to make one here in Santa Maria, big one. Oh, Sprouts Farmers Market. Oh, yeah. Hey, yeah, it's like a healthy grocery store. It's always a vibe going into one of those. Figma. This is like your Adobe competitor. Adobe tried to buy this company, and EU regulators didn't allow it. So a termination fee, Adobe just had to give this company $1 billion just for free, basically. And then they IPO'd like a year later. So there you go. Here's Figma right here. They actually really like them. They have nice growth, higher growth than Adobe. They actually move very closely with Adobe. The sales are up 38%. Obviously, just because the numbers are smaller, it's growing faster. Adobe is still growing nicely. The revenue's up 38%. Last quarter's up 40, 46, 50. So nice top line growth and bottom line growth. They had their IPO one-time fee this quarter, but they actually are making 20 to 100 million of net income a quarter. I actually have to beat on it. I don't know. It's an interesting one. Again, they just IPO'd, so there's not too much data here, but they had a nice beat on revenue this quarter. All right. I think ORN is an interesting one with a big federal and naval contracts we got. Let's check it out. Weirdly, though, when I zoom out on this stock, they're actually the same prices they were back in 2008. Oh, we'll look at Snowflake after this. Yeah. So yeah, marine and concrete. So, oh wait, yeah, this was that concrete business. Yeah. And yeah, I remember looking at the limestone business. So yeah, they don't make too much to the bottom line here. They're making a couple mil a quarter, which is good. So they're making a couple mil a quarter. What's the PE ratio? A 70. So the current PE is a 40 and the forward PE is a 70. So they're expected the net income supposed to fall another 30%. Well, it's a tough one. What was the growth rate? Let me check out the top line. So the top line revenue is, it just went negative. It's negative 0.7. Yeah, I'd be careful with this name. It's a repair and marine transportation of pipelines, bridges, causeways, and environmental structures. I think they were saying they actually do the concrete. With over 40 years of concrete construction expertise for a variety of industries, our Texas roots have reached Florida and beyond. We bring a 100-year legacy to marine experience, prioritizing on-time and on-budget performance, safety. So anyway, I'd be careful with them. Have them as maybe a small position. They've really underperformed the S&P, though, and they're barely making any to the bottom line. But those contracts, maybe I should look more into those because I don't know how those will turn out. So let's do Snowflake. And we got to do Dell, too, if I remember. So we have looked at Dell a few times. So here's Snowflake right here. This is like Palantir's biggest competitor. They don't make any net income, which is the bad part. They're burning through a lot of net income. But this is one of the companies that really are an AI beneficiary, an AI winner, gives companies real uses with their data. So let's see, their product revenue reached $1.16 billion, up 30% year over year. AI-related revenue hit 100 million run rate ahead of schedule, with over 7,300 accounts actively using AI features weekly. Customer base expanded with 615 new clients in 766 Forbes of the global 2,000 firms. That's pretty good. So the only thing that sucks is this bottom line right here. They burned through like 300 million of net income a quarter, sometimes 400 million net income. The losses have been narrowing though, which is good. We want to see them continue that. Still nowhere near profitability, but what's great is the top line growth, and they've been beating on expectations every quarter. Like this is what you want to see for a growth company. Just the new revenue hit, or the annual revenue hits a new record every year, every quarter. Great top line growth, just struggling on the bottom line because they're stock based comp. Is it better to swing trade or long term to hold? Yeah, actually, I'm a like taxes, all that aside. It's actually I'm a fan of buying and never selling great quality companies, and don't trim a stock when they're cheap. Like one of my biggest regrets are actually trimming and selling out of companies. Some of my biggest regrets aren't losing money on a stock. It's actually selling out of great companies like Robinhood and SoFi, where like I sold most of my money for a 3x gain, but looking back, that's unfortunate because now we're up, over 8x. And same with SoFi too. Hey, Trapper08, no way, man. Good to see you, brother. He said NWBI. Thanks for that gift there too. I do appreciate that. Okay. And Ondas, hey, what up, Aver and Mike? We'll check them out too. So here's Northwest Bank shares. So unfortunately, this bank has actually not done very well. They're the same price as they were in 2020 during the COVID dip. So what do? They are a bank. Okay. Mhm. Revenue's up 20% year over year, but the net income went negative. It was only 3 million. Maybe this was a little one-time adjustment, but we don't really, they don't report operating profit. I don't know. They look like they've been one of the worst performing banks out there. They pay a 6% dividend on high pay ratio. Honestly, I don't know about that one. What was the forward PE on this company? Forward PE is a 10. So they're actually, the net income is supposed to grow by 40% year over year. So that's good. So there is 40% EPS growth, but the stock just doesn't care, I guess. That's weird. I don't know. Be careful. Maybe it's the high payout ratio hurting them. Small position on PSIX because of the low market cap. Yeah, low market cap and just the risk around them. Those margins declining aren't great. So ONDS, here's Ondas Holdings right here. I'll be quick about this one because we've actually looked at them like 4 times today, I think. But look at this. The analysts are just really bullish. The sales are going to go from 4 million to 17 million in this quarter specifically. Like that'll be like 80 million of revenue a year. Just phenomenal growth expected. And if they keep beating on expectations, like they beat by a huge bit, they expected 7 mil, they did 10 mil. That's great news. So again, very small company. I wouldn't really trust anything meaningful in this company, but as long as they keep up this like quadruple digit growth rate like they have been, I think they'll just continue to do good. Thoughts on buying Warner Bros. And getting bought up by Paramount? Wait, WBA. What the? Is it gone? Warner, is that not their? Is it already gone? Oh, WBD. I'm just stupid. Yeah, I think the risk reward is tough. Yeah, I don't know. I mean, it can't hurt. But the time to do that, I guess, was when they first. I don't know. Yeah, I don't know. I'm not doing that. Okay. Yeah, hey, Soldar. Yeah, dang, we literally just did Snow as the very last stock. By the way, if you want to support me, there's only one way to support me, and that's, subscribe to my YouTube channel, watch the stream from YouTube. And if you go to the YouTube channel, you can actually rewind the stream, like literally just 2 minutes and watch what I just said. A lot of people like to watch the stream on the replay when it's over. So yeah, by the way, that's the number one way to support me. I sell nothing at all. I have no Discord, WhatsApp, Telegram, no coaching, literally sell nothing, no book. The only thing I do have is a YouTube channel. So if you want to support me, watch the stream from YouTube or just subscribe to there. Copart, what up? Awesome. We'll look at a few more here. Dang, we've been live for over 2 hours now. We actually stream every day. If you want to hit the follow button, this is our second stream of the day. Maybe look at AMD too. Expensive on PSIX, yeah, they're like a 14 PE. Actually, that's not super expensive. That's not too much. But yeah, here's Copar right here. They are at a 23 forward PE. That's very fair. But look at their stock price. They're at a new 52-week low on Friday, or pretty much. Let's go see if we can figure out like what happened there. Yeah, what does this business do? So for the past 3 quarters, they've missed on all expectations. Analysts predicted 1.17, they did 1.15, so they missed on revenue for the past 3 quarters. But they did beat on net income or they missed on EBITDA. So this is great, though. This is great numbers. They're easily making $400 million of after-tax net income a quarter. After they paid $30 million of taxes, they made $402 million, and they have a phenomenal balance sheet. That takes so much risk off the table. The fact that they have $5.24 billion of cash that's earning them interest of $50 million of interest a quarter. That's why they only paid $30 million of taxes. They actually paid more, but they didn't include the. That's why it was so suspiciously close, that gap there, because of the interest they made on their cash. That it just adds money to the bottom line. That's so insane. They're actually on my watch list. Honestly, the risk reward looks really good on this company, I will say. So hey, Paulo, I'm actually going to give you a follow there, Paulo. Thank you so much. Yeah, I'm trying to put on my YouTube channel on there. TikTok keeps like taking down my streams and removing them from For You page recommendations. So I do appreciate that. We'll be live for probably another 5 minutes here, and then we'll do a stock portfolio update. Then I'll get out of y'all's hair. But yeah, here's Chipotle right here. One of those restaurants. This is one of the restaurants I'd buy on the dip. Like, look at them the past year. They're well off their all-time high of, $70. Now it's 36. But it's not just this restaurant. It's all the restaurants. Like, look at Wendy's. Wendy's is almost at an all-time low. They're lower than they were in 1997. Not just Wendy's. Look at Jack in the Box. When was the last time anyone's been to there? I wonder, I think they removed their old little mascot of like the little, I don't even know what it was, like a white head thing. But yeah, Jack in the Box, same price as they were back in 2006. Look at Krispy Kreme, donut, ticker symbol DNUT, all-time low. They're only worth $700 million. They just lose so much money. So a lot of these restaurants are struggling, and that includes Chipotle. But Chipotle is one you want to buy the dip on because they make so much money. They're still, sadly, probably a little expensive here at a 31 forward PE, but check this out. If we go to their net income, they're printing $400 million of net income a quarter, easily $300 to $400 million net income a quarter, but the margins have been going down. If you look at the revenue, the sales, that grew 7.5%. Sales are up 7.5%, but the profits, the net income, is down by 1%. So what does that mean in English? That means their margins are going down, and it's kind of the whole industry is facing this. So Chipotle is definitely one I do like, though. Out of all of them, like, I wouldn't buy Wendy's on the dip. I'd rather buy Chipotle. They're making great net income. Yeah, Sweet Green, ticker symbol SG, is at like an all-time low as well. Look at Sweet Green. Wow, they make like those fresh salads, kind of like they lose net income every quarter. What's that other one? Is it Kava? Yeah, Kava Group. It's another kind of Chipotle stock. Look at them. They're also look very similar. So unfortunate for these restaurants. McDonald's, Yum Brands, those are other 2 great ones. You made me follow Rhyme with, I don't know who Rhyme with Paula is. I don't know what that is. Or, I'm just slow, I guess, today. Coca-Cola Consolidated. Hey, actually, this is the Coca-Cola bottler company. I love this stock right here. They've been one of the best performance stocks like ever. One of the reasons they gapped up right here on earnings, or not on earnings, why they went up so much is I've never seen another company do this, but they bought back at $127 a share, exactly at $127 a share. They bought back 22% of all the shares that exist. So that's going to make the EPS for the rest of the time go up by 22%. That's going to make the dividend cost 22% less. Gives every shareholder 22% more ownership in the company. They reward you via share buybacks, and they have a small dividend. This isn't the normal Coca-Cola company. Way, way, way different business. This is the bottler. They also bottle for Monster. They bottle for the Dr. Pepper a little bit too. So this is a great company. I've met the CEO. It's a very different and unique stock. The CEO, Jay Harrison, he owns 11.75% of the shares and 70% of the voting rights. There's no earnings calls for this company, and that's because Jay Harrison, he keeps this company Christian value based because he owns all the voting rights. It's an interesting company right here. They have this is what has caused the stock to go up so much. Check out their annual net income, or honestly, we should look at the annual net margins here. Net margins, before COVID, 2%, 1% net margins. But now for the full year 2024, 9% net margins. The net income growth is basically just been insane on Coca-Cola Consolidated. I really like them. Okay. Um, I'm stuck holding the trade desk. Am I screwed? That maybe, sadly, because I do think trade desk is going to keep on going lower. Super sad to say. I feel so bad, but trade desk is a tough one. I would not buy the dip on, not yet. Yeah, look at this article. I guess the trade desk faces competitive pressures amid price target reductions. Well, here's the thing. This is a TV advertising company. Netflix, for example, used to be like their largest customer. Netflix used to use the trade desk to find advertisers for their ad tier subscription. But now, Netflix and some other people are actually, Netflix moved to Amazon. And we can actually see what Morningstar Research has to say here. We can read what the bulls say and what did the bears say. And what did the bears say here is Amazon's demand side platform directly targets the trade desk's advertising space on the open internet, and its scale allows it to outcompete on price, pressuring their margins. Firms like Google and Meta have no incentive to work with trade desk. It would compress their ad revenue. So they have like this open path. Well, they still make great money. That's the thing. Like, I wouldn't sell out of this one. They still make great net income, a couple $100 million net income a quarter. But here's the thing. Even after this massive gap down, even after these massive dips that they had, they're still trading at 41.6 times PE or 41 times net income. And it's tough to even pay that on the dip. That makes Amazon look like, what's the forward PE actually? Let's check that. A 35. So a 35 forward PE, Amazon's way cheaper. They might still be a little expensive. And Meta's cheaper. Meta's at like a 22. Google's cheaper. They're the most expensive ad tech stock even after the dip, and they might not even be the growthiest. So that is, my opinion, the sad reason why trade desk is at this current price, and they might sadly continue to go lower. And I feel so bad that the guy's like, I'm holding the bag on the trade desk. What's your thoughts on them? And sadly, that's kind of my real thoughts on trade day. So yeah, if you like my perspective, I stream every day. I try to never be biased. I'll be super bearish on your stock or I'll be super bullish. It all just depends on the financials. And we always look at financials on a stock because that's what moves the stock in the long run. The financials sustain the momentum. It's the reason Lucid is at all-time lows and Nvidia and Palantir at all-time highs. Like, there's always short-term little technical analysis, but in the long run, fundamentals are the only thing that matters. And that's what I look for in stocks. And I'll share with you my portfolio. This is actually my dividend only portfolio where every stock in here pays a dividend. Most of these, as you can see, are like dividend growth companies, obviously Meta, Google, CEG, United Rentals. But yeah, year to date, we're up 16%. We also have a Roth IRA. We haven't checked that yet. How's that? We're up 0.5% in our Roth IRA right now. Looks like Innodata is up a little bit. This is kind of like a super risk on kind of portfolio here. But actually, HCA, Kafka, I like them. Obviously, this is our Moomoo account where if you look in the top left, it's called our buy and never sell account. Where once you buy a stock in here, I never sell it. I diamond hand it. Vanish said, what app are you using? Yeah, hey, these are all brokerages right here where you buy stocks. And if you want to get any of these apps, I'm on Robinhood. You just type it into App Store, Google, Robinhood, or Moomoo. This is my favorite one. Very first link in the link tree in my bio. Or yeah, if you want to use my affiliate links, all these brokerages are all in the link tree in my bio. This is my favorite one that I'd recommend. No fees, no costs or anything. And you get a nice 3.35% APY on your idle cash, all the cool analysis tools. But yeah, first link in the link tree in my bio there. Robinhood's the second link, Weeble's the third. But yeah, this is our Moomoo account. And we just diamond hand stocks in here. Our most recent purchase is actually Amphenol stock. We bought the dip on them on Friday. Let's hope they do good. Very cheap value. Well, actually, no, a 31 forward PE on Amphenol. I mean, that's so fair in my opinion. And then we finally have everyone's favorite, like my risk on Webull portfolio. All time in here. I just love being fully transparent. All time, we're only up 19.8%. So we've definitely underperformed. Here's our overnight market. UiPath is up, I guess, a little. Dave is down. Well, here's our total percent change in every stock. We got some big winners in here and also some really big losers in here. And some losers that you can't even see, like we sold out a ChargePoint a long time ago for a big $1,000 plus loss. Our most recent purchase in here is actually Southern Company. If you're looking one for a bit of a higher yield, this one has a 3.5% dividend. It'll keep up with the S&P, but it'll never outperform the S&P. It's a regulated utility, but you should just get on average, just for eternity, 7% of your money back. And If you're lucky, a little more, but like you'll get 7% of your money back, 3.5% dividends, and then like 3.5% stock price appreciation every year. So 7% total return. I think it outcompetes, and that beats a money market fund, because money market rates, like our Moomoo account right here and Robinhood and all the rates, your money market rates and your high yield savings account rates all just went down because interest rates just got cut. So it makes these dividend stocks look more attractive. And as interest rates go down, literally money floods from the money markets to stocks because they got to get a yield elsewhere, usually the dividend stocks or something. But yeah. So anyway, hope you guys have a great rest of your day. If you want to support me, the only way to support me is subscribe to my YouTube channel. It's called Nathan Roberts, also in the link tree in my bio. Watch the very beginning of the stream if you didn't see it. We do a whole analysis on Oracle and Broadcom. Those are two tech stocks that have tanked, and we do a whole other thing. So anyway, have a great rest of your day. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. Yo, my bad if I missed any stocks. We stream every Sunday this exact same time. Every Sunday we do 2 3-hour live streams. We stream every day, first of all, but on Sunday specifically, we do 2 3-hour live streams. This is our second one of the day. See you all later. Have a great rest of your Sunday. See you soon. And thank you to everyone on the YouTube stream. Y'all are the real man. Vanish, Brian, all the members, Plasma, Mike, Static. Thank you, AJ, if you're still here. Everyone there, thank you very much. I'll see you all next week, or I'll see